Good morning and welcome to our 142nd weekly webcast. Now, the way this call works is I first discuss the important and interesting business topics from the past week and how we can all use the news to enhance our careers or invest much better. Then what I'll do is I'll spend the rest of the 3-hour call taking your questions. Now, before we start, I want to invite you all to a live lesson I'm going to be teaching this upcoming Wednesday, June 30th at 11 a.m. Pacific time. And the topic is the new business for achieving career success in 2021. And everybody attending this live lesson on June 30th at 11 a.m. Pacific time will get a course of mine that I hardly ever give away for free. And there's going to be a lot of prizes as well. And so if you want to register for this, what you can do is you can actually go down to, give me 1 second here. Here we go. Yeah. So if you want to register for this, what you can do, here you go, is you can go directly to harouneducation.com/webclass. Right here. Yeah. And just click here to reserve your spot. And I hope to see you there. It'll be a lot of fun. There's going to be prizes and a lot of exciting stuff as well. And also, I wanted to say that if you're getting value out of these calls that I do every week over the past 141 weeks, please like, share, and subscribe. Thank you. And over the past 141 weekly YouTube webcasts and the many MBA office hours I've had, I've actually done more than 10,000 questions live here on YouTube. It's been a blast, and I thought, wouldn't it be awesome if you could type your question and I could immediately answer it based on the 10,000 questions that I've recorded and my team has indexed on YouTube. So I want to introduce you quickly to a free product of mine that's actually called Power Search. So the way that Power Search works is if you go to my website here, anything you type up here, you'll see I give you an answer for it, okay? Pretty much anything, even when you make spelling mistakes. So you can type in Ethereum or any business topic at all. I've answered tons of questions on this stuff. And then to find out where I answer this stuff in my courses, in my MBA program, you can click here as well. Okay, cool. All right. So now let's move on to the news. Should you short Coca-Cola, ticker KO, and is Coca-Cola the new tobacco? In a recent press conference, Ronaldo was justified in removing Coca-Cola bottles and placing them off camera and replace them with water. And this was fascinating because it actually caused the market capitalization of Coca-Cola to drop $4 billion. And Evian Water jumped all over this event and Twitter, and so did actually the World Health Organization. And in 20 years, I think our children are going to say to us, I can't believe you drank sugar water, which is awful for your health. And why did you own Coca-Cola stock? Now, this small bottle of Coke contains more than 6 teaspoons of sugar. 6 teaspoons, that's a lot. I don't drink alcohol, but let me show you what that means. All right, so a teaspoon is this size here. It's crazy. All right, so 1, 2, 3, 4, 5, 6. And that's actually not that much compared to a regular can, which is much, much more. Isn't that crazy? There's this much sugar in one of these things. Now, I don't drink anymore, but I don't drink any less. I'm just kidding, I don't drink. Okay, so close to 40% of Coca-Cola's revenue is from sugar-based products. And Coca-Cola has been diversifying for years into non-sugar-based products. However, given the health issues with sugar water, the company, although it has an awesome brand globally, the company is in secular decline. And the best investments we can make are long-term focused ones. And before you invest in any company, this works well. Ask yourself, in 5 or 10 years, will this company be less relevant or more relevant than it is today? Okay, are their products going to be more relevant or less relevant than they are today? And that kind of lets you get outside of yourself when you're doing investment research and see the forest from the trees. And if the answer to that question is less relevant in 5 or 10 years, then please don't get seduced and buy the stock if valuation is cheap, because those valuation earnings estimates are likely too high. So yes, I do think that many hedge funds will likely short Coca-Cola as a long-term secular short. Now, Krispy Kreme, the company that makes the best donuts ever, was once a publicly traded company. And hedge funds actually shorted it in size as consumers, from a health perspective, started consuming less carbohydrates. And so what happened with Krispy Kreme, the ticker was KREM. The company went public in 2000, and it was an awesome short when I worked in the hedge fund industry, as the stock dropped by close to 80% by 2005. Okay, they had secular issues because the products were bad for you, a lot of carbohydrates, and also they had a lot of accounting issues. Then in 2016, the company was taken private, meaning it was taken off the stock market. And very, very soon, this company, Krispy Kreme, is going to go public again at a valuation of close to $4 billion. And the company is not profitable, and like Coca-Cola, is a great long-term secular short. Retail investors are outperforming mutual funds and hedge funds, and they've been doing so for many, many years, partially because mutual funds and hedge funds have massive fees. And most mutual funds are actually a scam, because fees can be as high as 5% annually through many, many hidden fees. And yet, most mutual funds do not outperform the indexes like the S&P 500. So I recommend never buying mutual funds. So why are mutual funds still relevant? Why do they still exist? It's because they have massive lobbyist initiatives, and they pay a lot of money to CNBC and other business channels through advertising, something I'll never do. I'll never accept sponsors. The reason I won't accept sponsors ever is because I always want to stay true to my students as my customer, and my only customer ever. And so I recommend doing your own investment research if you have time. If not, I recommend buying ETFs instead. So ETFs stand for exchange traded funds, and they have fees that are often more than 90% lower than mutual funds. And they actually outperform mutual funds by about 90%. So how do you get started with ETFs? Well, let's go together to finance.yahoo.com, and don't ever pay for any investment research online, please. You can get all this stuff for free. You can even get the Financial Times for free, which I'll show you in a second. All right, so let me go here to top screen here. Go to finance.yahoo.com. Okay, so the first ETF I want to pull up here is the S&P 500. I'll do this very quickly. So this ETF allows you to buy all 500 stocks in the S&P 500. Those are 500 stocks that broadly represent the U.S. economy, and I'll talk about global ones in a second. The first thing you want to do is you want to go to Profile, okay? And then you want to scroll down to see what the expense fees are. And you can see right here the fees are 0.09% per year, which is nothing, because a lot of mutual funds charge up to 5%, including hidden fees. Okay, and also these ETFs don't turn over the portfolio much unless there's a rebalancing, meaning when a new stock is added to the S&P 500. Okay, that's a big deal, because that means you don't have taxable gains. And I'll explain that in a second from a tax perspective. So you look here at the expense ratio. Then what you can do is you can look at the holdings if you want to. And this is fascinating, because this will tell you what's in the S&P 500 and what the American economy is based on. And so here's the 12 segments here, the biggest of which is technology, no surprise, at 23%. The second biggest is financial services. Then if you scroll down, you can see all the stocks that make up the S&P 500. Now let's talk about an international one. So if you want to invest in Brazil, and God bless Brazil, my heart goes out to them for all the COVID issues there. But in Brazil, where I've invested a lot in the past, the first thing you do, as I mentioned before, is you look at the profile. Okay, so this fee is a little bit higher at 0.59% per year. We can also look at the breadth and depth of the Brazilian economy right here, where you see it's basically, first off, we've got a lot of natural resources, okay, then financial services. And this is very similar to the Canadian ETF as well, EWC. And I'm going to show you some commodity ones in a second very quickly. So we go here and we look at the Canadian ETF. Okay, it's called iShares MSCI Canada. It's Morgan Stanley Capital Index. The first thing we do always is we go to profile to see what the fee is. The fee is 0.51%. Okay, and you want that to be way under 1. In terms of the holdings, it's very similar to the Brazilian economy because it's very natural resources rich. Canada, you see natural resources here, energy, etc., and then financial services. Okay. Now I want to show you how to invest in gold, ticker GLD, which usually does well when the markets are not doing well. It's a flight to quality. I buy gold in size when the market is crashing. And it was my biggest position back in 2008 when the world was falling apart and the markets were in free fall. So the first thing we do here is we quickly look to see the expense ratio, which is 0.4%. You can see right here. You can also buy sector ETFs. So for example, there's the OIH, which is the Oil Services Index. So if you want to invest in drilling companies, you can invest in this. The first thing we always do is we go to look at the expense ratio, the annual fees. And so in this case, it's 0.35%. And then we can go and look at the holdings. There's Schlumberger, ticker SLB, Halliburton, Baker Hughes, and all these drilling companies. The best ticker, though, is Rig, Transocean. I love that one. Okay. So that's how you invest in ETFs, or that's what you look for at least. And I'll never be sponsored by anybody, but I want to recommend a certain ETF company to check out. It's called Vanguard. And let's go there very quickly together. Let's go to investor.vanguard.com. So here on this website here, Vanguard, you can actually look through many different ETFs they have. They have bond ETFs. They have stock ETFs, every type of ETFs you can think of, and the fees are very, very low. I recommend checking out Vanguard. I can't speak today. Okay, great. All right, so let me move on here back to my slides here. If you can't access Vanguard in your country, then what I want you to do is I want you to call the 5 largest banks in your country, and I want you to ask them to transfer you to their retail brokerage division and ask them how you can buy Vanguard ETFs, which have fees way below mutual funds. And that's one of the reasons why they outperform mutual funds is the low fees. Okay. And if you work at a company where the retirement investment program makes you buy only funds from large mutual funds like Fidelity, then you can ask if you can buy Fidelity's ETFs if they exist and if the fees are as low as Vanguard. Last thing I'll say when it comes to ETFs is another reason why they're better investments than mutual funds is because mutual fund managers, what they do, and I lived it, I worked in the hedge fund industry for years. Mutual fund managers, what they do is in the fourth quarter of each year, they chase performance because their bonus is based on how well they do. And when you chase performance, you're buying and selling stocks a lot. And when you do that, even if you make money, you realize a taxable gain. Because what happens is countries will try to reward you for being a patient investor. Meaning if you own a stock for more than a year and you sell it, you pay much less capital gains taxes. So the bottom line is, please don't ever invest in mutual funds. They are an absolute scam. Instead, what I want you to do is invest in ETFs. Okay, give me 1 second and get a little bit of water here. Ugh. And as you all know, I try and finish this every single day. All right, we are 60% water. Stick with water, not this thing here. Okay, cool. You can lose an unlimited amount of money by shorting a stock, and much more than what you paid to short the actual stock. Shorting a stock is the opposite of buying it. Buying it means you go long. Shorting it means you bet against it. So instead of shorting a stock, which can result in unlimited losses, I humbly recommend buying puts instead, and I'll explain this in a second, because the most you can lose is the amount you invested in a put. So here's how it works. Let's go together to finance.yahoo.com, and what we're going to do is we're going to look at Apple, ticker AAPL's options, and I'll explain exactly how this works. Okay. So finance.yahoo.com, here we go. And then what we're going to do is we're going to type here Apple. And a lot of people don't realize that you can get options on Yahoo Finance as well. So if we type up Apple here and we scroll down here to options right above my head, we can actually buy calls, meaning you bet a little bit of money that Apple's going to go up a lot. And if it goes down, you lose just this amount. Or we can buy puts, which means you invest this much money. If Apple goes down, you make a bunch. If it goes up, all you lose is this amount. And the way that options work is they're actually set at different dates. So let's look at the September 17th Apple puts. So let's scroll here to September 17th, and then we'll scroll down. So the top is calls. Blue means they're in the money. White means they're out of the money. Okay, so, and I'll explain this with a spreadsheet in a second. So I'll scroll down here to puts. And what I'm going to do is I'm going to show you the Apple 100 strike put. And I'll explain what that means. Okay. Don't get intimidated by these long tickers here. All this means is this is the ticker. This here is 2021. This is September. This is the 17th. This is a put. And this is the strike price, which I'll explain in a second. So we're going to go down to the strike price of 100, and you'll have this incredible aha moment in a second. It'll all make sense. Okay, so we can buy what's called the Apple 100 September 17th puts. Okay, 100 is strike price. And what that means is if the price of Apple, and I'll show you in a chart in a second, if the price of Apple goes below $100 by this September, then you make money. So how much does it cost you to buy the rights to get access to Apple hopefully going below 100? Well, it costs you 41 cents, okay? And the way that options work is you don't just pay 41 cents. They're actually in increments of 100. So this is actually $41, okay? Now, let me explain how much money you can actually make on an Apple $100 put using a spreadsheet I made for my students, which is part of my Udemy course coming out soon called the Complete Options course. And a much more detailed version of what I'm about to show you is going to be available for my MBA degree program students as well. All right, so let's go over here and let's enter the data. Okay, so in this spreadsheet, I show you how to execute a call option and what it means, as well as a put option and value puts and calls using binomial pricing and Black-Scholes. Okay, and I'll explain that in my course in more detail. So let's go here and let's select Apple. And automatically I have all this information populated for you as well in case you want to do investment research on sec.gov. Then what we're going to do is we're going to download data for Apple between this date and this date here. Okay, so I'll click this here, and this is going to call an API, so to speak, and there's no code in this, there's no macros. Okay, so what happened in the bottom left-hand corner is we just downloaded Apple's historical data for the past year. So I'm going to take all of this data, I'm going to copy it, and I'm going to go back to, where was I? Hold on, my spreadsheet, right here. Here we go, good. I'm going to paste this in. This will make sense in a second, okay? Great. So we have all the data in here. Now what we're going to do is we're going to enter the strike price, which is 100, and the cost, which is 41 cents, okay, for that put. And this will create a chart for us that I'll explain right now. Okay, so right here you could see that if the price of Apple between now and September 17th of this year goes below $100, this orange line here, then you make money. If it's on the orange line by September 17th or above, then you lose money, just the 41 cents times 100, 41 bucks. So here's the payoff that's automatically created for you right here. Okay, so let me scroll out a little bit here, get some more real estate. Okay, so here's how it works. So the most you can lose is 41 cents, which is just below this axis here, okay? And the most you can make is $100 minus the 41 cents you paid for that. And these are in increments of 100. Okay, so that's how a put works. A call is the opposite, which again, I explain in more details in my course and in my MBA degree program. Now, before you transact in options, I recommend creating a free paper-based pretend portfolio. And there's a lot of great software products and online resources to do this. My favorite, though, is a product that's made by TD Ameritrade called Think or Swim. And this is just simulated trading. Okay, you can log in for simulated trading or real trading. Just do simulated at first to practice. And if you type in the ticker here, you get the exact same information we just talked about, puts and calls. Now, if you can't get access to Think or Swim in your country, if you can't download it, just do a search on Think or Swim. Then what you can do, if it's legal, of course, is you can get a virtual private network on your computer, so you can access this from anywhere in the world. And a lot of people do this when it comes to cryptocurrency mining in certain countries like China, for example. Yeah. All right, so that explains options. If you have any questions about this, as always, please let me know. The bottom line is that buying puts is safer than shorting a stock, as the most you can lose is the amount you paid for the put. In the example with Apple, it's 41 cents times 100. Should you invest in a traditional IPO or a SPAC IPO? Now, SPAC SPAC stands for Special Purpose Acquisition Company. I recommend sticking with a traditional IPO instead of a SPAC if you can, as the risks are much, much lower with a traditional IPO, and here is why. A traditional IPO contains a massive legal document called an S-1, which we can use to read all about the risks, the financial statements, and the business model in much more detail. And these massive S-1 documents are written by investment bankers, written by investment bankers and lawyers, because this is a regulated market and governments want to ensure that investors don't get scammed. So what we'll do now is we'll go quickly together to sec.gov and we'll enter in the ticker FB for Facebook so we can access Facebook's IPO document. Now this is for a traditional IPO, not for a SPAC. So let's go over here together and we will go to sec.gov. That's the Securities and Exchange Commission's website. And we'll go to company filings, okay? And by law, all companies going public with a traditional IPO have to disclose all risks. So we'll type in FB for Facebook. Okay, great. And let's go here to, Facebook search. All right, more options. I'm going to type in the ticker. Give me 1 second, guys, sorry. And they just changed this website as well. So it's a little bit difficult for this 50-year-old man-child here to navigate. Here we go. Okay, great. All right, so this here is for Facebook. Then what we do is we type in S1, okay? This is the document that everyone has to file when they go public with a traditional IPO. And so here's the S1 document. When you see the letter A beside it, what that means is the IPO document was amended, okay? So back in 2012, when Facebook went public, the bankers filed this document. And this document here contains everything you need to know about an IPO, okay? And these documents are not as big or as thorough if you do a SPAC IPO. A traditional one, they exist, of course. So if we scroll down here through this investment banking S1 prospectus, we could see Morgan Stanley led the deal, top left, and Goldman was top right, okay? And these two here compete aggressively against each other. They're like the Boston Red Sox and the New York Yankees, right? There's good co-opetition involved with IPOs. You could scroll down through here and read everything you need to know about the company, the management team, etc. If you do a search for the word risk, there's 72 instances of it, right? So you can read all about the risks here if you want to. Now, in contrast, when it comes to SPACs, SPAC IPOs. The company does not have to disclose as much information in their version of what's called the S-1 filing. Also, a company often chooses to do a SPAC IPO because it's a lot cheaper for the company and they can go public faster, which is not a good thing. It's not a good thing for investors because with a traditional IPO, the investment bankers and lawyers do a lot more due diligence on the company going public, and they disclose all of the material risks by law to investors in the S-1 filing, similar to the Facebook IPO S-1 filing that we just looked at together. And in a traditional IPO, the investment bankers have their management team of the company going public meet with many investors. And the management team often gives the shares of the IPO to the investors that understand the company the best, which means that hopefully they're less likely to flip the deal, the investors, and sell it on day one of the IPO. Now, that process I just explained is called an investment banking roadshow. And SPAC IPOs don't use elaborate roadshows, which means the investors in a SPAC IPO might just be tourists renting the stock, meaning they're more likely to sell the stock, leading the price, making the price of the IPO go down. Okay, and with SPAC, there's not nearly as many government regulations, which means it's riskier. So on a regulatory spectrum here, we have a traditional IPO all the way on the right side. Okay, this is regulated by the government. On the left side of the risk spectrum here, we have no regulation, meaning very risky. And this is what we see with cryptocurrencies when they go public, when they IPO, which is called an ICO, meaning an initial coin offering. And ICOs are risky because cryptocurrencies are not regulated by governments, but instead, the good cryptocurrencies are regulated by the laws of mathematics when it comes to the maximum number of cryptos that can be mined. So I place SPAC IPOs in the middle here because, yes, they do offer some sort of investment offering memorandum that you can read, but certainly not as detailed as a traditional IPO's S-1 filing. If we add the element of time to our spectrum here for an ICO or an IPO, on the right side you can see it takes 12 to 18 months for a traditional IPO to occur. It takes 6 to 12 months to do a SPAC IPO, and an ICO all the way on the left side there is well under 6 months. And so I don't recommend ever investing in any company, public or private, unless you can read a very detailed investment offering, like an S-1 prepared by lawyers. And if you have a friend that asks you to invest in their company, what I want you to do is I want you to ask them for the investment offering legal document so you can look at all the risks. And then quietly ask yourself, why am I so lucky to be given this opportunity to invest in my friend's company? And this following thing I'm going to say, I say it with love in my heart. It might be because nobody else wants to invest. So the bottom line is, before investing in anything, always please read the investment offering memorandum like the S-1 document. And until SPAC IPOs are more regulated, I prefer the traditional IPO. Now, if this was useful, please like, comment, and subscribe, and thank you. Is a massive economic stimulus package bad for the economy in the long run? I humbly think so. Although it's important for governments to help during really, really tough times, I do believe that too much spending on stimulus packages bankrupts the next generation. And I think that governments are correct to issue stimulus checks. But it's terrifying, the amount of debt that's being created right now, which really destroys innovation in the long run. And I'll explain why in a second. So let's take a look together at the historical debt as a percent of GDP in the United States. Okay, and this is terrifying. So let's go over here to my browser, and we're going to go to a website called Visual Capitalist. They've got a great chart here on the national debt. So what we're going to do is we're going to look at GDP and the debt a country has, the United States, relative to GDP. So let's scroll down here. Okay, so during World War II, the amount of debt that the United States had that year relative to GDP was 104%, which made sense. If you go to 2008, when we were within 24 hours of bank machines not working, this amount was 39.4%. Remember the TARP program. And right now, in 2021, it's around where it was during World War II. And at the pace we're going at now, there's an unfortunate chance that this could spike a lot, which is terrifying. Now, let me go back here to my slides. I think we're at a point where starting in 2022, we must reduce the country's debt as a percent of GDP. And what's happening is, and I do believe in stimulus programs, I do, and I pray that everybody's going to make it out of this COVID conundrum. But if we keep spending like this into 2022, then a lot of younger people are going to call the stimulus program the steal from us program. And I do believe in economic stimulus, but I really worry that with the current debt spending trajectory, that this could end up being catastrophic. Too much stimulus can actually hurt innovation too. And Harvard economist Michael Porter wrote a book called Can Japan Compete? And yes, I know they can. And in this book, what Porter talks about is government stimulus programs after World War II in Japan. Now, after World War II, of course, the Japanese economy was disastrous. And so what the government did in Japan after World War II was they created these economic stimulus programs, and they gave money to every single sector in the economy, a lot of money. Now, there's two sectors they didn't give a penny to. And those two sectors are autos and consumer electronics. And those are the two sectors that Japanese companies are dominant in. And so there has to be some sort of survival of the fittest mentality or Darwinian economics in process longer term. And after COVID is no longer a global issue, we have to pressure our governments to be much more fiscally responsible with our debt and understand that too much economic stimulus can actually hurt innovation. And there's an old saying that the first generation makes the money, the second spends it, and the third has nothing. And I care deeply about the next generation. So in 2022, or whenever COVID is behind us, we must put an end to this reckless debt spending and put the next generation first. There's close to 1 billion online gamers, and revenue for online gamers is more than $20 billion every year, and it's growing like a weed. And the cost to set up live games for Major League Baseball, for example, as well as the NFL, the NHL, and the NBA is ridiculously high versus online gaming, which is infinitely scalable. And many online gamers make millions of dollars per year. And the average professional gamer, who often plays part-time, makes $60,000 per year on average, and this is growing. So take a look at your kids or nieces or nephews. They don't watch television. You know, what they do is they watch YouTube, and they also watch a lot of Twitch video game streaming. And Amazon bought video game streaming company Twitch for only $1 billion. And one day what we're going to do is we're all going to look back and say, wow, imagine if you could have bought the NBA, NFL, NHL, and Major League Baseball for only $1 billion. And so online gaming is a massive new market, and there are online commentators, coaches, journalists, and many of them are 100% employed by this new growing industry. And I think it's only a matter of time until online gamers like Ninja here, who plays Fortnite, make more money than all professional athletes. So the industry is growing very, very fast. And a lot of successful online gamers started with online side hustles, like Ninja did here. He started years ago teaching on Udemy. And my son Matthew here, this guy here, he's a bit older now. My son Matthew here, during the COVID quarantine, Matthew started making money streaming Clash of Clans on Twitch. during class. Yeah. Actually, it wasn't during class. Maybe a little bit. So if your kids are using Twitch to stream games, then good for them. Because those that look for different side hustles eventually turn their passions into their professions. And a lot of younger people that were quarantined given COVID will one day say that they were bored in the house bored. And being bored in the house or in the house bored, what they did, I got that from TikTok, sorry. By being bored in the house, that helped them to start their side hustles at a very, very young age. And when life gives you lemons, you can make lemonade. And with crisis comes online opportunity. Why is it that many great tech entrepreneurs don't come out of Microsoft or Amazon, but instead they come out of companies like Oracle and other companies in California? Well, Microsoft and Amazon's headquarters are not in California, they're in Washington State. And there's many reasons why California has a lot of successful tech companies, including the culture and the birth and evolution of the semiconductor industry in the 1960s in California. Okay, and one reason why California has more startups that nobody ever talks about is the free flow of labor and how these non-compete contracts are not enforced here in the state of California. So in California, you can work for networking giant Cisco, for example. You can work for networking giant Cisco today. Then you can quit tomorrow and go work at competing firm Juniper Networks. Then you can quit Juniper immediately and come back to Cisco. You can't do this in most other states. And many people that actually worked at Amazon in Washington State as an engineer, if they quit and they join Microsoft, which is also in Washington State, then they cannot be an engineer at Microsoft for at least 1 year, given non-compete contracts. So what happens is this. The engineer that leaves Amazon to join Microsoft often works in the finance department at Microsoft for a year, and then they join the engineering team at Microsoft after that 1 year non-compete has expired. And the free flow of labor has a material impact on innovation in any economy. In Canada, where I'm proudly from, it's harder to let an employee go, and often an employee that gets let go in Canada can still come to work for 6 months or so in many situations. Now, in the 1990s, we saw unprecedented economic growth globally. And when I worked at hedge fund giant Citadel, Alan Greenspan gave us a lecture. Now, Greenspan was, of course, the head of the U.S. Federal Reserve in the 1990s. And Greenspan told us that the reason why we had unprecedented economic growth globally in the 90s was not because of the technology boom. It was actually because the Berlin Wall fell. And when the Berlin Wall fell, millions of brilliant and cheaper Eastern European citizens moved west. And as a result, inflation was under control, as the biggest expense for companies is the cost of labor. So the bottom line is that many vibrant economies or states or provinces often prosper if there's a free flow of labor. All right, it is now time to take your questions. So as you know, all you have to do, whoops, I kind of screwed up that graphic there. I'm still here. All you have to do is enter your questions directly into YouTube. And what I'll do is I'll answer the questions in the order in which I receive them. Okay, let's do this. Let's do this. Let me clean up my desk here. Get my Q&A mouse here. I've got a couple of computers running. All right, let's do this. So, the first question, give me 1 second. The first question, from 3:46 a.m. this morning, is from Mohammed. Mohammed wrote, hey, Chris, good morning to you. What do you think would be the best place to publish my articles, on LinkedIn or Medium? I like writing about individual stocks and market direction. Should I launch my own blog website? Yeah. So I don't recommend using Medium anymore. So Medium took off for a while. And for those of you not familiar with it, it's like an online journalism website. And growth slowed significantly. And so many of us, myself included, pulled away from using Medium. Yeah, it's kind of like the MySpace of journalism, I think. So what I would do is I would publish articles on LinkedIn. And here's what you can do. Publish one article per week. And then after 52 weeks, take those 52 articles and put it into a book. That's what I did. I wrote a book called 101 Crucial Lessons They Don't Teach You in Business School. And all that book was about, I think it was 101 weekly articles I wrote on LinkedIn over a year or two. That's what I recommend. And in terms of how to write a book, and tons of my students have actually done it. And I've got a bunch on the shelf here. Let me grab one of them. And I'll teach you how to write a book really, really fast. So one of my amazing students named Phil Germany, who's in my MBA program, he's published 3 books. Okay, and this is his latest one called The Fat Formula. And Phil works at Rockwell, ticker ROK, a defense contractor in Cleveland. And so if you want to publish a book, it's easy to do. It's free to use my template for that. So let's go there together. All you have to do is go to harouneducation.com/ all lowercase, write book. And right here is, those are other books falling off the shelf, sorry. Right here, you can download my book templates. And it's basically just a Microsoft Word document. There's one page of instructions on the first page that will teach you for free how to publish on Kindle, Amazon Print, as well as ACX, which is Audible. And then all you do is you complete this whole template, and then you right-click on the table of contents and you repaginate. And then you just look at the instructions on the first page there in order to get your book published. But if you want to understand what social media websites you should use, I want you to look at Gary Vee. Okay, so there's this guy named Gary Vee, and if you get a chance, read a free PowerPoint presentation he has called 62 or 86 Pages of Insanity. Okay, and this here he explains the content model. And my dad taught me growing up, don't ever take advice from somebody that's not successful. Gary is way more successful than I'll ever be, so I use his advice. And the content pyramid basically tells you, you create content, and then what you do is you repurpose this content on different platforms. So for example, this YouTube call you're watching right now, what my team does, what we do and have done for years, is we take the 7 best questions asked or 7 best news topics, and we repurpose it as 7 vlogs throughout the week, which drop it every day at 9 a.m. my time. Then we take document or information from this call, pillar content, and we send it to Twitter, Instagram, whatever, that sort of thing. You'll see method is here, but he got rid of this logo on his website, and I'll show you. So if you want to understand what you should be using when it comes to social media, just do a search on Gary Vee, okay? And when you're on Gary Vee's website, there he is, scroll to the bottom, and you can see all of the social media icons that are important to him in the order that are of importance. So first for him is Instagram, then YouTube, then Facebook, Twitter, Snapchat, which I can't figure out, Instagram, and then podcast. You'll notice there's no method icon here. And the best way to do all of this, you can work smarter and not harder. The best way to do all of this is you can use a website from a Canadian company called Hootsuite for free. And there's a paid version as well. But what you do is you can actually write your content and have Hootsuite publish it on multiple platforms in the future. I think you get 20 or 30 free publishes per month or so. And that will allow you to get all of your content out there much, much faster. Okay. All right. Next up, and Mohammed, I would also create your own website. I would use WordPress, or you can use Squarespace or Wix. They're easy to create, these websites. I use Squarespace. Costs you next to nothing, and there's tons of templates. And the beauty of using a service like Squarespace or WordPress or Wix is that all the content you create for your website is enabled for mobile. And it's also enabled for tablets as well. Yeah. All right, next question. And if anybody has questions about how I made the content on my website, harounventures.com, let me know. And the way I did it was I used Squarespace templates. And if there's anything that looks advanced, like testimonials and stuff, I used a plugin from a website called elfsite.com. Okay. All right, next up, Luke. Hey, Luke, how are you, man? We want to name my son Luke. And I didn't want these two guys here, the older brothers, to be jealous when Dylan was born. We want to name him Luke. And so we told them, your baby brothers can be named Luke. And they threw a fit. They said, no, I don't want baby brother to be named Luke. I want him to be named Han Solo, which would be a dope name. Yeah. Luke, how are you? So Luke wrote, I wanted to get your thoughts on the crypto crash. And also, what do you think of Dashcoin and Litecoin? I took your crypto course, and I think they meet all the criteria. What do you think? I'm more of a fan of Litecoin right now. And for those of you not familiar with Litecoin, it's like Bitcoin, but they call it Bitcoin's little brother or little sister. It allows you to mine faster. And also, you use Litecoin for smaller transactions. So think of Bitcoin like your savings account and Litecoin like your checkings account. In terms of Dash, I don't have any updated thoughts on that. I don't own it. The 4 cryptos I've owned for years and I've never sold are as follows. Please do your own research, though. Don't rely on me. The 4 are as following, which I mentioned in the course. I own Bitcoin. I own Ether, and I'm currently mining Ether and have been for years. I also own Litecoin, and I own Ripple. Yeah. In terms of the crypto crash, there's a lot of volatility because China is really making it illegal this time. But the Chinese government tries to make mining cryptos illegal, but it almost doesn't matter because 81% of all pool-based Bitcoin mining is done in mainland China. And a lot of people, what they do is they use VPNs to do it. Right. And so when the market sells off like this and cryptocurrencies are oversold, this is usually when I buy. Yeah. You never want to buy something everyone else likes because there aren't that many incremental investors. Right? And Warren Buffett once said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Next up, we have Diana. Diana, how are you? Diana wrote here, hey, Chris, do you think a year off between high school and university is a hole in your resume, even if you've made marvelous accomplishments in that year? If yes or no, why? Yeah. So this is a really, really tough year to apply to get into universities. And I'm seeing it with Andrew. He's 17 now. Okay, this is when he was a lot younger. With Andrew, what's happened is in the United States, they've made it so that you don't have to submit your SAT anymore. And so people are applying everywhere now. And I'm not a fan of the SAT. And he's not taking it a year off, but if you have the luxury to take a year off and do charity work, I think that helps you tremendously. And when I went to business school, I went to Columbia University. I graduated in 2000. I'm old. When I went to Columbia, there were a lot of people in my class that took time off, a year or two off, that got in, that joined the Peace Corps. And God bless you, President Kennedy, for creating the Peace Corps. But I think if you do something noble and give back to society in between high school and university, I think it can actually help you. And the reason I say this is because when you write the application essays, if you get inside the mind of the admissions director, what they want to do is they want to diversify the student body. And if your child or yourself, Diana, if you have a lot of unique experiences that no other applicant has, this can actually help you. Last thing I'll say on this is if anybody on this call is in their 40s, 50s, or 60s, and they didn't go to university and you want to, it's so much easier for you to get in. So much easier because you have unique experiences. Okay, let me get some water here. All right. And a bit of coffee. All right, next up, we've got Colin. Colin, how are you, man? Hope you had a good week. Colin wrote, hey, Chris, top of the morning to you. Likewise. It's great to be here, and I'm looking forward to your June 30th event as well. Thank you. I appreciate it. And everybody, if you're interested in the event on June 30th, where I'll be giving away a course I never give away, you can go to harounventures.com/webclass. All lowercase, webclass. and register if you're interested. Next up, we got Demian. How are you, Demian? Demian Venezuela. Or Valenzuela, I'm so sorry. He's from Spain. He lives in Barcelona with his wonderful family, and I always tease him that I want him to buy the Fernando Valenzuela sweatshirt or jersey, as Fernando Valenzuela was the best pitcher ever. He's from Mexico originally. He played for the Dodgers in the early 80s. I remember it well. So Demian wrote, "Hi, dear Chris. Hope you're well. Likewise. Currently, cryptocurrencies are not efficient as a means of payment for day-to-day transactions, such as buying a coffee or purchasing a purchase in a small store. My question is, in your experience, what do you consider possible solutions to this situation?" Yeah. So I've invested in and been on the boards of a bunch of companies in the cryptocurrency sector that are trying to make this a reality. A lot of payment companies. One that I invested in was in Ireland. And for some reason, Ireland has some of the best payment companies in the world. Stripe is from there, and a lot of Bitcoin payment companies there as well. Maybe it's because in Ireland, you only pay 11.5% corporate tax. And so I think what's coming is a way for you to be able to transact using cryptocurrencies at checkout in lots of stores. You'd have to alter the point of sale system that terminals that companies like NCR make. It is coming. It's taking time though. It's taking time. Now, I remember years ago when I used to guest lecture at Stanford University Graduate School of Business, MBA students, I used to go into the Coca cafe there, and you could pay with Bitcoins, right? But that was kind of a novelty, kind of a one-off. And I see it every now and then as well. But we're not there yet. I think once Venmo starts using it and making it easy to use, and PayPal as well, then at checkouts when you scan barcodes, etc., that's how I think it'll get deployed globally. Yeah, it's going to take a while though, yeah, unless you're in El Salvador. Okay, and then Demian wrote here, "I'm still making progress in the MBA degree program." Awesome. I'm going for 10%. Okay, I'm very motivated and enthusiastic. An incredible program with practical and direct tools. Thank you. I'm happy you're a part of it. Thank you. And if anybody signs up for that program or any programs, you get a 100% money back guarantee in 30 days. Okay, so if you sign up for my MBA program and you don't like it, which is cool, you get all your money back. You can even binge watch the whole thing in 29 days and get your money back. Yeah. And I never see who asks for their money back, please. Nor should it matter. And then Demian wrote here, "Chris is a passionate teacher with solid knowledge." Thank you. And then you wrote, "Thank you to you. I'm reinventing my work life. I want to thank you with all my heart. Big hugs." Thank you. Thank you. God bless you. Thank you. Next up, we got Caspar. And if I pronounce anyone's name wrong, please let me know. Thank you. You'll be helping me. Yeah. And I'm sorry if I do. So Caspar is saying, "Good morning, everybody." Hi, Chris. Hey, man. Why do some stocks go up or down or flat year after year while revenues and margins increase, pushing earnings higher? It's a great question. So it's because there's a change in the mix shift of investors. So what happens often is there are two types of investors. Okay, there's growth investors and there's value investors. So growth investors buy expensive stocks like Amazon or anything growing fast, and they don't care about earnings today. They care about earnings in the future. Value investors like Warren Buffett like to buy stocks that are really, really cheap. Gotta get my martini glass prop out of the way here. Value investors like Warren Buffett love to buy stocks that are really, really cheap on an earnings basis, cash flow basis, high dividend yields, etc. And it's like religion, man. Like growth and value investors, it's contentious. They don't get along. And so what happens though is every stock eventually goes from growth to value. It happens over time. Usually when growth slows, growth investors sell it, and it's in what I call investment purgatory for a decade usually. No growth investor wants to buy because it's not growing fast. No value investor wants to buy because it's not cheap enough. So it takes a decade. And eventually you get a different mix shift of investors. Value investors will buy the stock if it gets cheap enough. Now the way to truncate or decrease this 10-year investment purgatory period is if private equity firms get involved, okay, and they try to speed up that process materially, which is what you see with Elliott Management right now and what they're trying to do with Dropbox. So Elliott Management owns a large stake in Dropbox, and they're activist investors, and they're trying to make the investors interested in the stock, because Dropbox is not really a growth stock anymore. It's not really growing. It's not cheap enough for value. So I think ultimately what's going to happen, I never know anything, is Elliott is going to sell the company. Okay, maybe to Salesforce. We'll see. Yeah, and I never know anything, but I have invested alongside Elliott Management for years when they did a lot of software investments in companies like CompuScare, or CompuWare it used to be called, as well as Novell, which is a Linux networking company. All right. And one other reason, Caspar, why stocks that have earnings that are growing, but valuation is coming down, it might be because either there's a black swan event globally that makes all stocks go down, or a company similar to them in the sector went down a lot for whatever reason. And the way you value companies is not just based on earnings growth, but also relative to what the market is paying for other similar companies in that sector. Okay. Next up, Caspar wrote, should I be worried about a company that increases its revenue every year, but at the same time, it spends more money on sales, marketing, and product development, which makes them lose money every year? It all depends. I don't mind investing in companies like that, and I'll explain why. A lot of companies that are tech companies that go public, they're not profitable for the first 1 or 2 years on a pro forma basis, and I can go there accounting-wise if you want me to. They're not profitable, and investors don't want them to be very profitable. The reason is investors want them to grow as fast as possible and then monetize it years or make earnings or money, net profit years in the future. And this is what's happened with Amazon for 2 decades now. You know, Amazon, if they wanted to, they could fire all their salespeople, all their R&D folks, and have insanely high profits, and their PE multiple would be under 10. But they're not going to do that because growth investors in Amazon stock want them to invest for growth. So it all depends on whether you're a growth or a value investor. Now, typically, and Amazon's a bit of an exception, typically private companies lose money. And when they go public a year or 2 later, then maybe they'll be profitable if it's a growth company. Okay, but it all depends on the quality of the management. Now, when you invest in a stock, you're investing primarily in the quality of the management team and the business model second. The jockey's always more important than the horse. And I personally would always rather invest in a company with an A management team with a B business model instead of investing in a company with a B management team and an A business model. The management team is all that matters, or matters more than anything. And when all the founders leave a company, I usually run for the exits. And I wrote an article about that as a guest columnist in Venture Beat magazine years ago. You can do a search on it if you want for my thesis. Yeah. Okay. Next up, I got Vishnu, who wrote, "Hello, Mr. Chris. Hey, how are you? Hope you're doing well. Likewise. I got some new lights here as well. I hope you guys like it. But like anything else, man, you can't buy anything brand new. You can't get parts for anything, so I had to buy these things refurbished. Yeah, so it's first time I'm using them. Yeah, we're trying to step up our game here, and our goal is by the end of this summer for this weekly webcast to look at least as good as CNBC, humbly. And hats off to Matt Lacousse, my wonderful Chief Creative Officer, for doing a wonderful job with this. Thank you, Matt. All right. All right. Next up, Kevin wrote, "Good morning." Thank you, Kevin. And Kevin, thank you for the Father's Day message you sent me. I replied, but the email bounced. Yeah. Then we have Elias. I have a cousin named Elias who wrote, "Hello, Mr. Haroun. How are you? I sent you an email yesterday. I hope I will receive your feedback. Thanks. I try so hard to answer all emails. I'm so sorry if I missed anything. Yeah, thanks. Ask me here if you want to. Yeah." Next up, Andre is saying, "Good morning, everyone." Good morning, Andre. Hope you're doing well. I have a son named Andrew. This guy here. Beautiful name. My middle name is Andrew as well. And then we have Persona Non Grata who's saying, "Hello, Chris. I'm a silver MBA degree program student of yours." Thank you. I have your age, by the way. Cool. Thanks. But you definitely don't have my maturity. Yeah, I'm 7.5. I'm a man-child. No. My sons have 3 little brothers. Or my 3 sons have 1 little brother. You wrote, "You cite every now and then so-called penny stocks. Would you please explain to me what they are in detail?" And then you wrote, "Thankfully yours." Yeah, thanks for the question. Yeah, please don't ever invest in penny stocks. And I say this because, or do your research first. Pardon me. do your research first. I say this because what happened in 2008 was a lot of hedge funds went belly up when the market sold off because they invested in a lot of illiquid stocks. Now, what this means is this. You never want to invest in any company that doesn't trade a large amount each day. And the rule of thumb is for retail investors, you want to be able to get out of a position within an hour if you need to. So always look at the average daily trading volume. Otherwise, what happens is illiquid stocks own you in a down market and not vice versa. So let's go there together and I'll show you what this means. So before you buy any stock, I want you to look at the average daily trading volume. So I'll type up any random ticker here. See if this comes up. Well, it's a number. Ticker is actually in, oh my God, goodness. Tickers in Japan are actually numbers like Nintendo 7974. So before you invest in any stock, what I want you to do is I always want you to look at the average daily trading volume. Okay. So what you do is this. So the average volume for this company, AMC, movie company, is 154 million shares roughly. You take 154 million times the stock price, and you want to make sure that whatever that value is way higher than the amount that you're investing so you can get out because, again, illiquid stocks own you in a down market and not vice versa. Yeah. All right. There are many currencies pegged to the United States dollar and a couple pegged to the euro. Would you please explain why some countries decide to peg their currencies? Absolutely. Absolutely. So the best example I can give is a Caribbean island, okay, like Jamaica or Barbados, the way it used to be. Because Jamaica and Barbados, most of the revenue that country makes, most of the GDP, is from American tourists. What they do is they peg their currency to the United States dollar so that tourists are more likely to want to visit. So there's less volatility in terms of how much it costs them to book a trip, that sort of thing. So the bottom line message usually is whatever country you do most business with, a lot of times smaller countries will peg their currency to that currency. And it's deadly, though, and I'll explain why. And George Soros, a great investor, a great macro investor, in the 1990s, he made $1 billion in one day on 2 occasions. And he did this by causing countries with fixed currencies to unfix them, to float. And so, for example, in Thailand, the Thai baht, B-A-H-T, the Thai baht used to be pegged to different currencies. And in order to do that, what you have to do as a government, like in Thailand, is you have to have a lot of money and you have to be able to buy and sell your currency a lot so that from a supply-demand perspective, it matches the price that you're pegged to, whatever other currency. And so what George Soros did was he borrowed a lot of Thai baht so that the government in Thailand couldn't get access to enough reserves. And then he shorted the Thai baht, right? And he forced the government in Thailand to kind of run out of foreign reserves so that they had to eventually allow the Thai baht to float versus other currencies. And eventually they ran out of money and the Thai baht went down big time one day in the 90s. And George Soros and all of his hedge fund buddies, as part of the hedge fund mafia, they all piled on that trade. Yeah. And actually, Soros did this also to the Bank of England. Yeah. Okay. And then next up, Persona Non Grata wrote, what are the pros and cons, in your opinion, of using the SWOT analysis? Gratefully yours. No, thank you. Yeah, so the SWOT analysis is one of many crutches I teach in my MBA degree program so you can answer any question in any interview or business situation. And so if you're stuck and somebody asks you a business question, you could say, well, let me analyze this using the SWOT analysis: strength, weaknesses, opportunities, and threats. I'll get off with the strengths. The strength. And what I just did there is I bought myself time to be able to think of the answer while showing the interviewer that there's actually structure to my logic. In terms of the strengths and weaknesses of the pros and cons of the SWOT analysis, it's kind of vague. It covers the strengths, the good things of a company, the bad things, some of the opportunities, and some of the threats. And it's confusing for people because it's tough to really decipher the difference sometimes between opportunities and threats, because with crisis comes opportunity, right? Also, a SWOT analysis is qualitative. It doesn't involve anything financial. You can't quantify it. So if you're going to answer a question using a SWOT analysis, I would throw in some financials as well, or some statistics like GDP numbers, revenue numbers, etc. Okay. And Prakash is next up. Prakash wrote, attending your session Thursday evening has become a habit now. I thoroughly enjoy every minute of it, and I like it. Thank you for your support. I appreciate it. Thank you. And we've changed a lot. The process is getting a lot better. We're not there yet, though. I want the graphics to be like on television and stuff. Yeah. We're pushing the goalpost out. Yeah. All right, ePronto from Toronto. ePronto said, good morning, Chris and the audience. Weekly Ontario news. Phase 2 reopening next week. Awesome. Hair salons will reopen. I'm looking forward to losing my pandemic haircut. Awesome. Awesome. And I'm so happy to hear that in Canada. My brother and sisters, my parents live in Toronto as well, Mississauga to be exact. And it's been disastrous, COVID there. It's been mismanaged, but things are getting better fast. Yeah, it's great to hear. And by the way, for those of you that work or that are in countries where it's starting to reopen, and God willing, they reopen soon, book every appointment you think you need for the next year today. Book doctor's appointments, hairdresser appointments, etc., flights, because it's impossible to get access to all that stuff here. You got to be long-term focused, yeah. All right, next up, Manas from India wrote, good morning, my dear mentor. Good morning. You look like the chairman of HEV, Haroun Education Ventures, in that black suit. Thank you. You look so cool in that. Thank you. Appreciate it. It's fun playing adults. I got to fake it till I make it. Then you wrote, when is your Oscar coming home? I was thinking about it yesterday. Oh, thank you. Thank you. So about, I think it was 7.5 or 8 years ago. 7 years ago now, yeah. When I first started my webcast, somebody asked me about my goals, and I mentioned I want to get an Oscar one day for best business documentary. It makes the world a better place. So I've got a lot more work to do in terms of getting ready on screen, my videography experience as well. Thank you. And Manas wrote, you still have 7 years, I guess. Yeah, you're right. To achieve that deadline for getting the Oscar. Hope to see you in the Academy Awards soon. Thank you. Thank you. And if I ever do humbly get one of those things, I'm going to start off by thanking my students first. Ray Seals is saying good morning. Good morning to you as well. Next up, ePronto from Toronto is saying, in case you're looking for this webcast new topics, here's an idea. Why not use your audience to send you suggestions through the weekly and look for common questions? That's a great idea. That's a great idea. Thank you. And why don't we do this right now? If anybody wants me to cover a certain topic, enter it here, because quite often your questions influences me to talk about certain topics that are relevant to you, my customer. Yeah. Thank you. Next up, we have Anurag. Anurag is saying, dear beloved Chris, hello. Data is the new oil, as claimed by top leaders. And data science has become the buzzword now. When it comes to finance, would you recommend learning this skill looking into the future? Yeah. So what happens is every couple of years in the business and technology market, there are new buzzwords for stuff that's existed for years. So for example, a decade ago, everyone was talking about big data, which existed many, many years ago as well. So when it comes to data analysis, it's basically dashboarding, which is the stuff I enjoy most about it, and analyzing numbers, right? Statistics. And so what you can do if you want to, and I'm going to be teaching statistics soon as well. I've got a Galton board here. This is normal probability. Those are my lights. And the reason that they're honeycomb shaped there is so the light cuts. It doesn't mess up the back. But the way I would start with data analysis to see if you're passionate about it is I would use Excel, and I'd play around with pivot tables. And if you enjoy that, then move on to a product called Tableau, which is owned by Salesforce. Yeah. That's what I would say. And if you enjoy it, then go for it. And there are plenty of online courses you can take on learning about data analysis and artificial intelligence and all that great stuff. And I enjoy it too. But when I actually make my dashboards in Excel, what I do is I make them so that there's no code at all. But I love dashboarding. I love Excel. It's a lot of fun. A lot of fun. And if you're going to do this, make sure that you use named ranges, like you name your cells, like I've done here, so it's not too complicated for all of us to be able to understand what's in them. Okay, let me stop nerding out and get back on track here. Okay. All right. And Andre wrote, "Wow, thank you." Anurag said, what are your thoughts on including data science in your MBA program? I'm working on it now. It's coming very, very soon. It's coming to class number 89 if you're all registered. If you graduated last year from my MBA program, you'll get access to this as well. Every year I add tons and tons of new content as well. And my program will always be up to date as well. If there are new social media applications that haven't been invented yet and they're gaining traction, then I'll teach it to you. I'll learn it and teach it to you. And it's interesting because my kids, their jobs haven't been invented yet. And the way they communicate with business associates of theirs in the future has not been invented yet. And so I'm always going to try to stay humbly current and add new tech topics, etc., to the program. Yeah. All right. Next up, Anurag is asking, can you please explain why in Udemy's long-term course worth hundreds of hours are not available? Also kindly explain the Udemy business model. Yeah, the longest courses I've seen on Udemy are, I think, 50 or 60 hours. That's basically it for now. My longest one, I think, is 27 hours, one of my crypto courses. So I don't really know the strategy longer term, although I do teach on Udemy. I'm not privy to anything confidential. Yeah. In terms of their business model, so the best business models in history are platforms. So whenever you look to invest in a company, look for a company that owns the road. Because if you own the road, then what you can do is you can charge the cars, right? And you want to be able to grow subscribers as quickly as possible, and then you can monetize it, which is what Udemy has done. So Udemy in EdTech is Google and everybody else is Bing. And what I mean by that is Udemy is the dominant player in the online courses market. And usually there's 1, 2, or 3 players in every market that make it. The rest go belly up. So for example, in search, there's Google, and then that's basically it. There's Bing if you work at Microsoft, and there's Yahoo if you have to use it, that sort of thing. Always look for platforms. Platforms are the best investments you can make because they're the most infinitely scalable. Yeah. And when it comes to venture capitalists, and I used to work in the VC sector, we care a lot about subs, right? The number of people on a platform. And when the founder of Snapchat came up to the San Francisco Bay Area and was trying to raise money many, many years ago, he was explaining the business model. And he was saying you take pictures and then the pictures disappear. And then what happened was the venture capitalists that were listening to him were saying, I don't get it. Why do I want to lose pictures of my kids? I'm not investing. And then a year or two later, he came back to Northern California to meet with the same venture capitalist. And he said, remember me? And we now have 6 million subscribers. And the venture capitalists were like, oh my gosh, that's the best business model ever. So all that matters when you're building on a platform is the number of users or subscribers you have. And then we look at certain data points like MAU and DAU. MAU, which stands for monthly active users and daily active users as well. It's like Field of Dreams. If you build it, they will come. And when they come, you figure out how to monetize it. Okay, next up, Anurag wrote, by the way, what's the strategy from switching to suit from t-shirt? You look awesome, though. Just asking on a lighter note to your mentor. Yeah, thanks. I kind of want to mix it up a bit. I'm changing things. I did get complaints earlier this year that I sounded tired on this webcast. Right, the older I got, the better I was. So what I did was it was more than one complaint, and more than one data point makes a trend. So what I did was I got rid of my chair from the office entirely. Right, and I don't sit down at all day long until at night. Right, and this keeps me more upbeat as well. And I always want to be improving this weekly call. Always. And so I thought a different look might be kind of fun. It's fun playing grown up, yeah. Although I never want to wear a tie ever again. It's the most moronic thing, and it makes you choke. Arnold is saying there's more than 10 teaspoons of sugar in a 340 milliliter tin of Coke. It's unbelievable. Yeah, this bad boy here, which I talked about at the beginning of today's webcast when we talked about Ronaldo, has 6.4. I did the math on it as well. Yeah. And then you said the solution is actually super saturated, and they use an adhesive to prevent the sugar from crystallizing. It's fascinating. And if you ever have a dirty spoon, for example, or a pot, and you can't get all that crap off the bottom of the pot after you cook, you can put Coca-Cola in it, and after a while, it'll dissolve all that stuff, which means it's kind of bad for your intestines as well. Yeah. And they've been trying everything they can possibly do to not be as reliant on that sugar water product, but more than 25% of revenue is Coca-Cola, okay, for them, for ticker KO. And more than 40% of revenue is sugar-based beverages in general. Yeah. They own Dasani water. There's a reason they own it. Yeah. Okay. Next question is from ePronto, who's asking, How to Win Friends and Influence People by Dale Carnegie versus How to Win Friends and Influence People in the Digital Age Renewed Edition. Which is better today? Is the Digital Age one better for teens? Yeah. I didn't know there's a new version, but I think everybody needs to read or listen to the audible version of How to Win Friends and Influence People. It was written by Dale Carnegie, and without Dale Carnegie, people like Tony Robbins wouldn't nearly be as successful as they are today. But I'll check out the new digital version because the original was written in the 1930s. Yeah. Thank you. Manos wrote, I've devoted my life to helping people by teaching them. Awesome. So I decided something in the first stock I'll buy will be Udemy stock and shares. Do you think that's a great decision? If yes, then why? Yeah. So in terms of Udemy and investing, so Udemy is a private company at this point. Again, I don't know anything about the company when it comes to IPO. But what you can do, the way to find out if a company is going public is as follows. I'll show you. So what you do is you go directly, get my other keyboard here. And by the way, every call I have on Zoom, I have to hold this up here. It says, please, I got focus on here. Please unmute, thanks. Yeah, and people do that to me too. I put it on the back of my keyboard, yeah. But if we go here to sec.gov, I'll show you. Here, yeah, so you go to sec.gov right here. And the way to know if a company has filed to go public is you go here to more search options and you type in the name. Okay. And again, I will never know when they go public. And here, it looks like they've not. Okay. So right here, the last time they filed was when Dennis Chang, great guy, was CEO. And you can look through this. And this was actually, I think they were raising money at this point. Right. Yeah. Dennis, Delaware-based company. Dennis was the CEO. You see his name here. Yeah. Yeah. But what you'll do is you'll see an IP. Yeah. Dennis Yang years ago. You'll actually. Oh my God, guys. I'm such a freaking moron. Okay. I'm so sorry, guys. That was my first senior moment of the day. Don't buy my courses because I'm senile. Okay. I just showed you on the wrong computer. I'm an absolute idiot. So I'm going to go here again and repeat the same exercise. Okay. So if I go here to company filings, you can actually search for the company, more search options. And you search for the name here. So you enter in Udemy, for example, okay? And here you'll see that if you click on Udemy, they don't have any IPO filing. When you see an S1 appear for any company, then that will tell you or signal that in 6 months the company will probably be publicly traded. But on this file here, it's a Delaware-based company, and a lot of companies incorporate in Delaware because when the Constitution was made hundreds of years ago, a lot of lawyers were there, and so they can crank out legal documents cheaply. Yeah. The last time they filed was back in 2014. The CEO at the time was Dennis Chang, who's a great guy, right here, or Dennis Yang. I'm so sorry, but you can basically see all the details on when a company is going to go public by going to sec.gov. Okay. All right. Next up, ePronto wrote, and I could see in real time I lost 4 viewers there. Okay, sorry. Okay. Next up, ePronto wrote, I'm confused about hedge funds. On the one hand, you say their goal is to preserve capital for wealthy clients. On the other hand, they participate in risky stock shorting activities. Please explain. Yeah. So the best way to explain how all this works when it comes to a hedge fund is, let me show you a spreadsheet I made for you guys. Okay. And it's actually right here. I'm going to unhide a tab I made on explaining hedgings. Yeah. Okay. So the way it works is this. Like, think of your backyard. Okay. Think of your backyard, and you have a hedge around your backyard, and you want to protect your backyard and your house. So they have a hedge around it. And a lot of hedge funds, like the one I worked at, Citadel, are named after this concept. Citadel means you have a moat protecting your castle. There's another one called fortress, where you protect your castle as well. And so what you want to do is you want to make sure you're perfectly hedged if you can be. So if you're 50% hedged, and I made this spreadsheet here, see if it works. If you're 50% hedged right here, then only half of your backyard or your house or all your assets are protected, okay? If you're 100% hedged, then what that means is you're perfectly protected. So what does this mean when it comes to hedge funds? Well, a lot of hedge funds will have limits on how much they can protect, okay? So a hedge fund that runs 10% market neutral, it means that they can only go long or short the market by 10%. So they're only 10% exposed. It's hard to make money that way unless you lever up a lot. Okay, so that's what a hedge fund does. A hedge fund's primary purpose is, number one, preserving capital. Number two, generating positive returns, or alpha as they call it. Alpha is how much you beat the market by. And so very wealthy people, what they're most interested in, and this is kind of counterintuitive, but very wealthy people, what they're most interested in is preserving capital, because they made their money and they want to preserve it. And they want to preserve their capital to such an extent that if the market sells off materially like it did in 2008, they want to make sure they don't lose that much money. And so wealthy investors don't mind sometimes underperforming the S&P 500 if they invest in hedge funds, as long as their capital is preserved. Yeah. So hopefully that explains that to you. Yeah. Okay. And next up, Manas wrote, I was assuming something. If I always get hold of educational company stock, it's a growth investor tendency or a value investor tendency. Yeah, it all depends. If the educational company has been public for many, many years, like University of Phoenix Online or whatever, then they're a little bit more value-based. If it's a new IPO, then they're growth-based. Yeah. Okay, and then give me 1 second, guys. Okay. Next up, Manas wrote, my mentor, thank you. I was really curious, if Udemy goes public tomorrow, let's assume, how many maximum shares am I allowed to buy as an individual? What's the number and why? Yeah. So if and when Udemy goes public, and I'll never know for sure, but you can always go to sec.gov and search for company names, and you'll get the S1, which means 6 months from now they go public. So in terms of how many shares can you buy, it's a free market. So you can buy as many shares as people are willing to sell at any level. Yeah. So yeah. And usually when companies go public, what they do is there's two classes of shares. There's primary shares and secondary shares. Primary shares are brand new shares the company created to sell to the public. And the use of proceeds for primary shares is usually, they say, for general corporate purposes. What that usually means is opening more sales offices overseas, etc. Then there's secondary shares. Secondary shares means insiders, let me adjust my microphone, insiders in the company that are selling, or venture capitalists, for example. Okay, and those are secondary shares. And when I participate in IPOs as a venture capitalist, when I've harvested my investments, I wasn't allowed to sell for 6 months after the IPO. And that's important to mention. It's called the IPO lockup. And so 6 months after the IPO, the venture capitalists and a lot of the employees are allowed to sell shares, right? They don't let them do it day one, otherwise everyone would sell, because everybody wants liquidity now. Kind of like George Costanza saying, serenity now. Please tell me somebody gets that reference. I know I'm old. But what I would do is I would always sell almost all my shares 6 months out, because that was like 99% of my liquid net worth at the time. Yeah. Okay, next up we got Mehdi, how are you? Who wrote, very proud to have such a knowledgeable teacher. May God bless you and your family, Chris. Thank you. And may God bless you and your family much, much more. Every day I wake up, and before I get out of bed, I always thank God for 10 things in this order. Andrew, Matthew, Dylan, my kids, Christine, my wife, my mom, my dad, my brother, Jamie, my sisters, Katie and Elizabeth, and I mix these up too a lot. And then the last one is my students, you. Yeah. Thank you. I'm grateful to God to have all of you. Thank you. Next question is from Manas, who wrote, Warren Buffett has left the Gates Foundation recently, ? Do you think he is now no more interested in Microsoft or Bill Gates? Yeah, I don't know, but I do know that Bill Gates and Warren Buffett have been great friends for decades. They play bridge a lot together. Yeah. Okay. And then Kenny is asking a question about mutual fund VTSAX. I'm so sorry, I don't know what mutual fund that is. If I were to do research on VTSAX, what I would do is whatever you bought it from, maybe it's some mutual fund that starts with the letter V. I would go to that mutual fund's website and read the investment offering. Okay, it's kind of like an S1 document, a bit smaller, but you can read a lot about the company. Yeah, and make sure when you call the company that sells VTSAX. Okay, you can call them your customer. Ask them to explain the fee structure to you. Okay, and if the customer service rep doesn't, if they explain it, you still don't get it, ask them to explain it again, and then explain it back to them, just so you thoroughly understand how much you're going to be paying in fees. Okay. All right. Next up, Manos wrote, "You're drinking water. That's cool. Thank you. I've got it here. It's called Bottled Joy. It's a bottle of joy." And you wrote, "I drink at least 4 liters of water every day. The more, the better. Have you tried yoga? And why don't you put a video of yourself doing yoga on your channel? It will be cool." Yeah. I have tried yoga. I'm not very flexible, but my wife took me to Bikram yoga. Yeah. I didn't like it very much. Yeah. It's relaxing, but I don't know. I exercise in different ways. Yeah. Okay. Next up, Liesel wrote, "I'm very excited for the Udemy options course." Thank you. It's coming out later this year. I'm having a lot of fun doing it. The problem I'm having with it, though, to be intellectually honest, as always, is how to make it in such a way that it's fun and engaging. And so what I've done, and you all know I use a lot of props when I teach. I'm trying to teach it step by step, building blocks. Because if I just throw options formulas at everybody, it's hard for me humbly to understand it myself. But if I build on it slowly, one brick at a time, then it's easier. And so what I did was I actually bought a bunch of Lego bricks. And I'm going to use these bricks to teach each concept. And I've got the stickers I'm going to put on here with writing on different option strategies, so that you'll have this aha moment when you look at the forest and the trees and understand how all of this stuff works. Yeah. All right. Okay. Next up, Vishnu wrote, "Have you tried the Brave browser, Mr. Chris? It uses BAT tokens, BAT tokens, and has a lot of privacy features as well." I've not. What I do is I use a VPN, a lot actually. Yeah, and I use it for security reasons, but I also use it because I want to be able to, and I use ExpressVPN here. Okay, this product, and Marquise, my favorite vlogger, mentioned that's why I bought it. He's sponsored, yeah. But I use this so I can check how my courses are selling and my other products, my other companies globally in different markets. I can pretend I'm in Germany today or different countries using this VPN. What I will say is it slows you down a little bit, but it's definitely worth it. Yeah. In terms of antivirus software, I don't know if you guys remember 2 weeks ago, I had a bit of a problem starting the webcast. It was a little bit choppy. The reason was because I had Norton's products. Norton, Symantec, I had their firewall product, which I promptly removed because of that issue. It's a double-edged sword. I get the product to protect my computer, it makes it worse. Yeah. I have another system now. Next up, Joseph is saying, "Great job, Chris. Thank you for all the value you provide." Thank you. I appreciate it, Joseph. Yeah. And I like the icon you've got there with the with that little that tool thing. Very cool. Okay. And ePronto wrote, "If you're familiar with Coinberry, based out of Toronto, it's a crypto trading platform, a competitor to Coinbase. What are your thoughts on them? Any reputation red flags?" I don't know them. Sorry. I've never used them. Coinbase for me is like my checkings account. It's online. It's a hot wallet, which is dangerous if you put too much money out there. So it's my checkings account, and my savings account are my tokens that I use for a wallet, or my wallet's like the Ledger Nano S. And my Trezor as well. Okay. Next question I've got is from Vishnu. "Do you remember all of these topics every time, Mr. Chris, or do you even sometimes refer to books or other reference documents?" Yeah. So everything I do is I answer all questions. I read everything in the order in which you guys enter them in. In terms of topics for the news, the 7 topics, what I do is I prepare all day Wednesday. Okay, so yesterday, all day, I script them myself. I come up with the images. I put the images in Photoshop, change it around. I put it into PowerPoint and all that stuff. So the 7 topics, it takes me a whole day. I'm getting better at it now. It's getting faster and faster and faster. I'm making them a bit shorter though, because I think I made the last ones a little bit too long, to be intellectually honest. Yeah. Okay. Okay. ePronto is saying Silver Lake private equity firm is investing $1 billion in Splunk, ticker SPLK. If you know of the deal, can you translate to English, please? Is it good, bad, or neutral to shareholders? The stock shot up 12% upon the news. Yeah, I don't feel comfortable talking about that because I have some very, very, very good friends. My best friend works there. Yeah, so yeah, I can't talk about. I don't know anything about the deal. He never discloses anything, but I'm very close to the company. Yeah. And my best friend, Scott's his name. He's the guy that introduced me to Sam Malouf to go and buy these clothes. It's a beautiful jacket, but it's moronic on the inside. That's like, dude, that's like 1970s curtains. Yeah, I am that old to remember that. Yeah. But the best thing I learned from Splunk, the former CEO of Splunk, a guy named Godfrey Sullivan. He's no longer there. He retired. He was the CEO of Hyperion. I was the 3rd largest owner of that stock years ago when I worked at a hedge fund. The best thing I learned from Godfrey Sullivan is that you always want to praise your employees in public and only criticize in private. Yeah. And when you criticize, obviously, you start with something complimentary. Yeah. So there's nothing more more degrading than being berated by your boss in front of your colleagues. Yeah. He's a good guy. Next up, Vishnu wrote, you're one of the best business teachers I've ever seen. Thank you. I just wanted to know, to reach such potential, do you have to remember all the complex terminology, calculations, and other stuff? Or is it like we can refer to any of your materials whenever required? Yeah. So for me, I love helping people. And, when I was younger, they thought I had a learning disability. And so I always, and I didn't have a learning disability. Let me show you a prop here. So when I was in the 6th grade and the 8th grade, they sent me this place called Chisholm in Oakville, Ontario, on Lakeshore Road, that tests to see if I had a learning issue. And the reason why my grades sucked as a kid is because I wasn't passionate about what I was doing. And so my dad, in the 8th grade, he bought this for the house, right? This is a Mac, obviously. Stickers I put on when I was a kid. And my mouse used to actually go right here, Velcro. And my grades went up a lot, humbly. Because I love computers, I love software, I love technology, I love gamification, to the extent that everything I do with technology, and I enjoy it. So it's not a job for me; it's a passion. And in my MBA degree program, I've got a lot of gamifications as well, right? So everything I do is a lot of fun for me, and I think one of the reasons why I like explaining things. I've lost a lot of people on the webcast there, so I'll move on quickly. You get real-time feedback. I love explaining things using props. It's fun for me. I have to be artistic and teach in a different way. Otherwise, I get bored and I'm not adding value to my students. Yeah. In terms of remembering stuff, if you ever want to take a look at anything I've ever taught and you want to see a video for it, it's always easier to watch a video than text. Yeah. What you can do is you just go directly to my website, right? You go to Haroun Ventures. And you can search for any topic here. I've got thousands and thousands of videos here. If you want to learn about the VIX, which is the best telltale indicator for when to buy stocks, you can go here, that sort of thing. Yeah. Or if you're in one of my programs, one of my courses, if I mention it, like, I don't know, a stock or an income statement, whatever, in my MBA degree program, if you're registered, you can click here and get immediate access to it. Yeah. So everything is indexed. Yeah. Everything I do has a purpose sometimes. Okay, next question is from Mina. How are you? Mina is one of my wonderful MBA degree students. She's from Greece. She used to work at Ryanair, a great Irish discount carrier, and now she quit, and now she started her own company. And she's going to be writing about it in the business plan part of the MBA program in the 3rd semester when we cover the venture capital bootcamp. She's awesome. So Mina wrote here, Chris, hope all is well. Today is Christina's birthday. Oh, great. Also, amazing idea about the esports venues and commentators. Thank you. I appreciate that. Yeah, and Christina is one of my amazing MBA degree program students, and she's the one that influenced me to do this, actually. Right? So every day she asks me during class, where are you at? And we compete. It's competition, yeah. She's great. She's great. She's starting to work with me as well. She's awesome. Her advice rocks. And I will say happy birthday to Christina later today. Thank you. Next up, David wrote, so what I'm hearing is that non-compete agreements are hurting the economy. Is this true? Then perhaps they should be negated and outlawed. Yeah, it all depends. It all depends because companies do have the rights to protect their intellectual property, corporate secrets, etc. So perhaps they should be outlawed, but I do believe that language should be in all contracts about not disclosing certain things about companies. Yeah. But I'm with you. I agree with you. Okay. Next question from Vishnu is, what is the difference between a stock and an IPO? Yeah. So a stock is in an IPO. So an IPO is when a company goes from private to being public. When it's public, it means it's now a stock and it's listed on the markets. Yeah. All right. And you can go to my website and at Power Search at the top of my website, do a search on IPO and investment banking. There's tons of videos on it as well. Thank you. The Aqua Hood, how are you? The Aqua Hood is Michael. He's from the United Kingdom. He's a great guy. He grew up with Sacha Baron Cohen as well. So Michael wrote, wow, didn't get my notification email that you're live. All good now. Hi, Chris, and hi, all. Oh, you didn't see it? Okay. It usually goes out. Yeah. I use a product called Active Campaign to do it automatically. My great team does. Joe and Joey. Yeah, my family. Okay. Next up, Michael wrote, Chris, can you explain just how, roughly, how implied volatility is calculated? Yeah. So when it comes to valuing options, one of the biggest inputs, okay, is calculating something called volatility. And the more volatile a stock is, the more expensive the options are on it, right? Because you make money when you buy and sell puts and calls based on how volatile a stock is. And so what I'll do is, let me show you here really quickly up top. And this is coming out soon in my options course. So if we look at binomial pricing or Black-Scholes pricing, and this is just mathematical crap to tell you how much, a put or a call is worth. Right here, volatility, it's complicated, but what you do is you first of all, you get the price of a stock, okay, for every day for a year or so. Then what you do is you use a very complicated normal probability formula to look at the rate of change for every single day for a year or so. Then what you do is you calculate the volatility, and I've got it in here somewhere. Let me go to Black-Scholes. Yeah. Then you calculate the volatility by using standard deviation, okay, and the square root of 252. So you take the standard deviation of all these data points on the right here, the normal probability stuff, okay? And then what you do is you then take the square root of 252. And the reason why it's 252 is because the market's open 252 days per year. It's not open 365 days per year. So that explains how I calculate volatility. There's a couple of other ways to calculate volatility that I'm working on including in the course. The challenge I'm having is how to teach all this stuff brick by brick, layer by layer, so it's intuitive and enjoyable and fun as well. Right. So that's why it's taken me a little while to get this course out, but it's going to be fun when it's done. And that rhymed. Yeah, sort of. All right, next up, Hidden Creature wrote, how do I start and scale a startup in emerging countries? Yeah, so there's no barriers anymore. You don't have to be in the San Francisco Bay Area or in United Kingdom or Hyderabad or anywhere, any tech center to start a company, right? The barriers have been destroyed. Anybody can start a company online, right? It doesn't matter what country you're in. And in my MBA degree program, I explain that in a lot more detail. And the favorite part of the MBA program, as voted on by my students, is the first 5 classes of semester 3 in the entrepreneurship track, where we have the venture capital boot camp, where I teach you everything you need to know about writing a great business plan, okay, and also how to raise money and much, much more. Yeah. And when I teach, everything I teach, I try to make it global in nature, so it applies to everybody. Yeah. All right. Priya is saying hello. Hey, Priya, how are you? Nawazish, how are you? Hope you're doing well. Next up, we have David Yurman. I always smile because my wife bought fake jewelry, David Yurman jewelry years ago. It's a great brand. So David Yurman wrote here, Chris, good afternoon. Good afternoon. Things have been volatile in the market, in life, and in the world. I haven't been able to study the course yet. I'm at 11% into the MBA program and really want to complete it. Take as long as you want. So the way it works is you have access to my MBA degree program once you purchase it forever, and you can complete it whenever you want. You can fast track it, complete it in a month or 2, or you can take 10 years. You have access forever, and I always add new content as well to it. Yeah, take your time and enjoy it, please. And if anybody has signed up recently and you're not enjoying it, if it's not value added, get your money back, 100%. Okay. And then David followed up by saying, I'm also studying insurance to eventually get my Series 6, 63, I took them both, and more depending, so I can manage portfolios for a fee. Should I just focus on one area of study or push the MBA? Also, oh, dude, you wrote, I'm having a baby any day. Congratulations, man. Congratulations. Very cool. Mazel tov. Happy for you, brother. Awesome. Awesome. Yeah. What I would do is there's 5 tracks in the program. Just do the finance stuff for now. Okay. And then you can focus on the other stuff later. So in the track, there's 5 tracks. In the program, there's 5 tracks. Finance and accounting, sales, marketing, and communications, entrepreneurship, economics management strategy, and personal growth. Just stick with this one for now. Okay, take the finance and accounting classes if you're interested in portfolio management. Yeah. All right, let me get some breakfast here. Next question is from Harsh. Harsh, how are you? And Harsh was my student that told me to watch the movie 3 Idiots, which changes your life. You got to watch it. Great movie, 3 Idiots. Harsh wrote, should everybody start a YouTube channel? Yeah, I mean, as Seth Godin said, you already have everything you need to build something far bigger than yourself, which is these things. Everyone has one of these things, right? So I think you should. I think everybody should vlog. You don't have to vlog every day. You can do it once a week or once a month. But I think we're going to look back in 10 years and say, oh my gosh, I wish I had created more YouTube content. Every video I make, I think of it as a little coffee franchise, a little Tim Hortons coffee shop. And they make money over time. I do it because I love doing it, though. And YouTube is the only gold rush in history where it doesn't cost you any money to make the product. And YouTube is also the only gold rush in history where you have access to billions of consumers for free immediately. And I have a course called the Complete YouTube course. You can take it if you want with Sasha Stevenson. We co-taught it. I met her on week number 10 here on my webcast. She has over 100 million views on her channel. She's an internet sensation in Indonesia. I've never met her. I'd like to meet her one day. She's also Canadian, though. Okay. All right. Next up, Levy wrote, hey, Chris, I know a kid, a 10-year-old in the neighborhood who is passionate about video games and wants to have a YouTube channel. How do I get him involved in the industry? What should he learn first? Yeah. So what I would say, and when you teach online, for example, my son Matthew, for years he's wanted to make a course. Like on Udemy, you have to be 13 years old to do it, at least, right? And so I would, here's what I would do. I would have him, if you want, if the parents are cool with it, start to use Twitch, which is easy to download for free, or even use YouTube, like my son Matthew has done, to make videos on whatever his game of choice is, be it Roblox, Minecraft, whatever. And then just the market will guide him or her over time, yeah, through feedback, kind of like it has for me. And I get a lot of critical feedback, yeah. Okay. Fred Mendoza is saying hi. Hope you're doing well, buddy. Fred's one of my amazing MBA students from Baltimore. He works in the healthcare sector, and he's passionate about stocks and investing and options, too. Next up, Harsh wrote, will Uber ever be profitable? Yeah. So the investors in Uber are growth investors. They want the company to keep expanding and grow revenue as much as possible, and then one day monetize it, kind of like Amazon has done. It's a land grab, though. It always is initially. When an industry is growing, you want to capture market share, as much market share today, and then monetize it in the future, kind of like Amazon did for about 20 years after the IPO in 95. Elias wrote, hi again. Hey, man. I am focusing now on the below course, the complete personal finance course. Awesome. Thank you. The issue is that the course is very helpful and rich, but I need some help getting started in the investing world. I humbly need your assistance. Yeah, ask me questions here anytime, please. Where do I need to start to have an investing account? For example, how to select a brokerage firm. Yeah. So there's one exercise which has you call the 5 biggest banks in your country, right? It's in the course. Do a search for it. And when you call the 5 biggest banks in your country, ask them to be transferred to the brokerage department as well. Or do they recommend a brokerage firm? Then when you call those 5 brokerage firms, as explained in the course, and there's an exercise there too, I want you to ask them what the fees are. And then pick the one with the lowest fees, of course. And only buy ETFs and non-mutual funds, yeah. Okay. And then Elias wrote, yeah, and your follow-up question, exactly. I think I answered it there as well, yeah. And then Elias wrote, if a stock is listed in the Beirut Stock Exchange, for example, and I'm part Lebanese, can I still find out all the data in Yahoo Finance explained in your course? Yeah, there are a lot of international companies that are listed on Yahoo Finance. And if you go to the stock selection tab there in the course, I teach you how to navigate Yahoo Finance to get international quotes. Yeah, most are there now. Yeah. Okay. And then Michael said, "What do you think of the actuary profession?" I don't really have much knowledge in that sector. I'm so sorry. Yeah. Pearl, how are you? Next question's from Elias, and give me 1 second here. Elias is saying, how are the fees paid to a brokerage firm? Is it on the initial buy? Is it on the volume of the stocks? Is it on each time we sell a stock? Yeah, usually it's a commission, right? So it might be, I don't know, a couple pennies per share that you buy. And a lot of firms like Robinhood don't really have commissions anymore. And the way they make money is they make money based on how much money you leave in your account that's not invested. They collect interest on it, and also through their stock loan business, right? For people that want to short, they make a fee on that sort of thing. Okay. And Amy wrote, Chris, you explained complicated concepts so well. Thank you. Thank you. It's because they thought I had a learning disability. Yeah. And actually, it's interesting. I used to have my own column in Inc. magazine, and my editor, who taught me a lot about how to write and all that stuff, he said, Chris, always write at an 8th grade level, which is easy for me because that's my maturity. But you have to do that because you got to cast your net very, very wide. You got to think about a massive total addressable market. It's just the way I talk anyway. Yeah. Other things I learned from my editor was don't ever make a paragraph in any email or any article more than 3 sentences, ever. Otherwise, it looks too overwhelming and people get disengaged. Yeah. Other things I learned were in titles. Titles are important. You can use keywords like must. You know, it's imperative that you. That sort of thing, crucial words. And also use numbers as well. 5 reasons why you must start that company today. And last thing I'll say is that the image for your article, for example, on LinkedIn or your YouTube video thumbnail is important because people do judge a book by its cover. And I teach about that in my complete YouTube course and in my MBA program in much more detail. Yeah. All right. Okay, next up, Manas wrote, when are you including Clubhouse in your MBA degree program? It's crushing the market right now. Why not create a webcast on Clubhouse? It'll be cool. You know, I'll do that. I'll make one of the topics in the next few weeks on Clubhouse. Now, next week we have a call, right? Wednesday is the big events. Love for you all to join June 30th. Go to harounventures.com/webclass to sign up, all lowercase webclass. Next Thursday we have a call as well. And then after that, I'm going to be away. I'm going to be in Rwanda, building one of my schools with one of my MBA graduates, Vital. And I'll do the webcast from Rwanda at some point. But there's going to be one week where there's no webcast because it's family time. Yeah. Okay. Okay. Next question is from Kevin. Hey, Kevin. Kevin wrote, "Hey, Chris, I want to change my career in my 50s and start with your MBA degree or blockchain development. They both interest me very much." Yeah. So I would say, yeah, and you put a question mark there. Should I do your MBA degree or blockchain? I would do whatever you're most passionate about, right? If you're more passionate about business, then consider taking my MBA program. If you're more passionate about blockchain, then do that. Now, I don't teach how to make a blockchain, but there's a great guy named Kirill, who's from Russia originally. He lives in Melbourne. And Kirill teaches on Udemy about how to make a blockchain. Yeah. And the way that you know, and this is kind of a generic answer for everybody, the way that you know you found your passion in life is if I tell you you're not allowed to go to work or travel or go to school for 30 days. What do you do with your time? What do you love doing? That's what you were meant to do, whatever it is. And don't listen to anybody else, but follow your heart and be willing to fail a bunch of times and not give a damn what anybody thinks. And something wonderful happens. Your dreams come true and the money follows accidentally. It always does. But you got to get in the mindset of saying, I don't give a damn what people think of my choices in my life, my career, who I am, etc. And the best entrepreneurs are like that. They never gave a damn what anybody thought of them. Yeah. Which is problematic sometimes because sometimes they need lawyers to stop them from tweeting certain things. I'll stop right there. Okay. I think you know what I'm talking about. Okay. And next up, Michael wrote, where is he answering questions? Oh, right here live. Yeah. Okay. Anurag wrote, Dear Chris, what are your hobbies that you indulge into? Yeah. My hobbies, every second I'm not working here and helping my students, is with my three amigos, my kids and my wife, Christine, of course. Right. And their hobbies are my hobbies. Right. So, we'll golf sometimes together. I put up a new basketball hoop here at home. We'll shoot some balls together. We'll go play baseball together. And a lot of video games, a lot. Yeah. It's fun. So I love video games. I play with my kids a lot. It's fun. They have a little brother and me. And I also play video games by myself when I'm stressed out. Yeah. And I think video games are a good investment in yourself to a certain extent. It's like meditation. You can kind of chill out. And so the games that I'm playing right now, there's three of them I've been playing for years. One of them is SimCity, which came out in 2013. I love it. Damn you, EA, for not making a new SimCity and destroying the Maxis acquisition. Will Wright's my hero. The other game I play is Age of Empires Part 3 right now. Okay, I play the modded out version. And Age of Empires Part 4 comes out October 28th. I've already pre-purchased it. And the third game that I play a lot is GTA 5 modded out big time. Right, so I've got an Alienware PC and it looks great, and that game was made in 2013, but I love it. But you can't do online with modded out stuff. I don't mind though. Yeah. And when GTA 6 comes out, I'll probably cancel my webcast for like 8 million years because I'll be playing that. Yeah. All right. Next up, Amy wrote, by the way, what is your outlook on Vimeo's growth prospects? It's carved quite a nice niche in e-learning. Yeah. I only use Vimeo when I have professional videographers create content for me, and they always share it that way. It's just what the industry uses. Yeah. Aside from that, I don't really see any purpose for it. Yeah. YouTube already owns the market. Yeah. Okay. Next question is from Demian, who said, Chris, would I have your thoughts and opinions about Sam Ovens from consulting.com? Many thanks. I'm so sorry. I don't know who that person is. Yeah. Moving on to Abby, I'm so sorry. ABHI. Abby, hope all is well. Abby Kapoor wrote, Chris, I want to thank you for your answer last week. You're most welcome. I had a question about networking meetups this upcoming year for those in the early 20s. I remember you saying that age shouldn't hold us back. Absolutely, dude. Absolutely. You're never too young or too old to reinvent yourself. The average age of somebody starting a company in America is 52 now. And there's a lot of kids that will have started their empires, during COVID, being bored in the house bored. A lot of kids. Yeah. And so my son, Matthew, he's a bit older now, but he's actually done quite well playing video games online. right? And he couldn't really go outdoors or do much else because of quarantine. They've been at homeschool, unfortunately. They're now going to be back in school in September. So he did that. This guy, Dylan, he's 11 now. He's making money by selling a lot of my tech stuff I don't use anymore. I give him a 20% fee, uses eBay. And this guy, Andrew, he worked at Safeway as a stock reshelving boy as well. Yeah. But it doesn't matter how old or young you are. I mean, a lot of people are going to look back at COVID and say, as awful as it was, when life gives you lemon, you make lemonade. And with crisis comes online opportunity. And a lot of people will look back and say, I started my empire at that point. And you got to try to start a bunch of side hustles online and keep trying. And Ninja, I mentioned it during earlier in this webcast. Ninja, who makes millions playing video games online as a side hustle. It's actually a full-time gig for him now. But he started out teaching on Udemy years ago as well. And so a lot of people that make a lot of money online, they tried many different avenues, and eventually, a certain avenue is touched by God, or you hit a vein, it does extraordinarily well. Yeah. Okay. All right, next up, Mina, who's one of my MBA students, wrote, I'm competing with you guys too, but I drink tea and coffee instead of water. Yeah. And Abraham Lincoln once said, if this is tea, please bring me some coffee. If this is coffee, please bring me some tea. Yeah. And that's from my TEDx talk as well, where I talked about tea, technology, education, and acceptance, solving all problems in the world. Yeah. Everyone should do this. Drink a lot of water every day. All right. And Mina, you inspire me. All right. Next up, Manos wrote, thank you, my dear mentor. God bless you and your family forever. God bless Ruby as well. Ruby is my cat. She's getting big, man. She's getting big. And Dylan, I probably shouldn't say this, but I don't care. Dylan, my youngest one, he's 11 now. He was in school, and they teach you certain things in school that I kind of wish they left it to the parents to teach. But he came home, and Ruby was there, and he said, Ruby, do I have your permission to pet you? Yeah. Okay. All right. Thank you very much. I appreciate that, Manas. Arjun, how are you? Arjun M. And I worked with a guy at Goldman years ago named Arjun Murdy. Good dude, Canadian as well. So Arjun wrote here, Arjun M. wrote, hey, Chris, hope you're doing well. Some workplaces, there's some workplace doubts here. Should we take a bullet for our boss and coworker? Nothing illegal and all, but still significant. Do you have any situations like this? Yes, I've been in many situations like that in the past. Where I've worked with people, I'll never tell you who they are at certain firms, I'll never mention them, that have asked me to do certain things and take certain calls with certain people that might know something about stocks. And my response has always been, I don't feel comfortable doing that. Okay? Yeah. Don't ever compromise your ethics just to pad the wallet of a criminal. Yeah. And it's interesting because a lot of billionaires, they're, a lot of them are self-made. That's how they became billionaires. But a lot of them actually compromised ethics to get there. And sometimes you'll hear about in the news a certain billionaire is in jail for insider trading, like Raj Rotman, who gets out of jail next month. And you wonder, you think to yourself, why the hell would you break the law, man? You're a billionaire anyway. Because once a cheater, always a cheater. Okay. All right. And give me 1 second, guys. Next up, Victor. Victor wrote, good morning, Chris. Good morning, Victor. I love your energy today. Thank you. I appreciate it. Could you please briefly explain how one stock purchased on a market converts into a company's income at all? What happens after a stock is bought? Yeah. So when you buy a stock, what happens is you own what are called common shares. Okay. And the way it works with any investment is if you buy a debt instrument, right? If you loan somebody money, buy a bond, then what happens is, and if that same company sells shares in the company, then the person with the senior claim that gets their money back first is the bondholder, the debt holder. Then there's two different classes of shares I'll explain quickly. One is called preferred shares because you get preferential treatment. Okay, you get your money back second if the company goes belly up. Then the last person to get their money back, the lowest of the low, are the common shareholders, hence the name common shares. So when you buy a stock, you own part of the company. You have equity in the company. In terms of income, so the company, usually people like to invest in companies that are not very expensive. And the metric they look at when you're looking at income is called price to earnings. And so every formula that you learn for the rest of your life, the easiest way to understand formulas is as follows. On the denominator, I want you to think of it as the number 1. On the numerator, it's whatever it is. So if the price to earnings ratio is 10 times, that means for every $1 in earnings a company makes, investors are willing to pay 10 times that $1 in earnings. If a company is growing very, very fast, people will pay more than 10 times. So that's how you should think about earnings when it comes to financial ratios when you buy a stock. Now, earnings, net income, and profits, they're all the same thing. And some companies that make a ton of money that aren't growing fast, what they'll do is they'll take part of their earnings or net income or profit, same thing. They'll take part of that money and they'll give it back to shareholders in forms of a dividend, which is usually paid out quarterly. And so if a company is trading at $100 and it has a 5% dividend yield, that means over the course of a year, you'll get $5 from the company that's sent to your bank account. Yeah. So that's how it works. And if you have additional questions based on that, please let me know. And thank you. Okay. Soy Boomer Doomer Low IQ. That's a pretty cool name. I like it. SBDLI says, can you explain Max Payne? Yeah, sure. Yeah. So Max Payne is a video game. That rhymes. Made by Take-Two, right? And the ticker is TTWO, the same company that makes Red Dead Redemption, which is a great game, and Grand Theft Auto. And Max Payne is about this guy that he's kind of a loner. His family tragically passed away, his wife and child, and he's kind of he's a vigilante. He fights crime, but he does it kind of in a brutal way. And there's been a couple of different video games made on that. They haven't used that IP or intellectual property in a number of years. They made 3 versions of the product. The first one did well on the first Xbox in late 01, early 02. And what they did was they kind of pioneered the use of the Matrix kind of bullet moves and body moves in the game. So what you can do is if somebody's shooting at you, you push a special button so you can kind of move out of the way. Like in the Matrix, kind of fun. All right. And Samir is saying, when will this course be online? I think you're referring to the options course. Yeah. So it's coming later this year, but a much more comprehensive version will be added to the MBA curriculum in class number 89 for those of you taking it this year. And you have access to all new content I make forever when I put it in the MBA program, if you guys sign up. Yeah. All right. And if you want to learn more about the MBA degree program, what you can do is, and let me make sure I get the right browser this time. I think I got it here. Yeah. What you can do is go to harounventures.com/webclass right here. Okay. And then you can sign up for the event by clicking this box here. Yeah. And so it's going to be next Thursday, June 30th at 11 a.m. My time, Pacific time. Okay. And then you can sign up and you'll actually get a taste of what the MBA program's all about. And I'll be giving away a course I never give away to everybody on the call. One of my longest courses. It's not the crypto one. Yeah. And there'll be a lot of prizes and stuff. And I'm going to teach you a lot of really, really great stuff as well. And here's Dave Snyder's one of my amazing MBA students. He graduated last year. Great guy. He's in Belgium. He just texted me last night. He's got a new girlfriend. He's really happy. Life's going well for him. And I love him. He's my brother. Okay. Let's see here. If I miss anybody's question, just paste it again, please. Thanks. Yeah. Okay. Next up, we've got Michael, who goes by the Aqua Hood. He's based in the United Kingdom. Great guy. He wrote, "Wow, thanks for explaining implied volatility. Looks as complicated as I expected, but I'm looking forward to options and derivatives course. Thanks." And there's a lot more stuff I have to add to vol as well when it comes to implied volatility. Yeah. So I'm still working on that now. Yeah. It's fun though. Okay. Next up, Steve is Magic wrote, "You the man, Chris. Keep it up. Thank you. Appreciate it. Thank you." Now I got that song in my head. Oh, it's Magic by the Cars from 1984. The album was Heartbeat City, I think. That's how old I am. Yeah. Rick Ocasek. Rick Ocasek was the lead singer. He married Paulina Portskova, I think. Yeah. Okay. I love music. You set the soundtrack for your own life. So when I'm in a crappy mood, which is hardly ever, or if I don't feel inspired, what I'll do is I'll ask Alexa to play my favorite soundtrack, which puts me in this amazing creative state. You gotta try it. You set the soundtrack for your life. So my favorite soundtrack is this. Alexa, play the soundtrack from the motion picture Interstellar.
Interstellar, original motion picture soundtrack by Hans Zimmer on Amazon Music.
I love Hans Zimmer. If anybody's on the call from Germany today, thank you. Thank you. Yeah. So we'll listen to this in the background not too long because I don't want to get a copyright strike from YouTube. Yeah. Hans Zimmer is great. Like, listen to any of his music, the soundtrack for Man of Steel, Gladiator, etc. It'll put you in a great mood. Yeah. It's really quiet at the beginning part here. All right. Next up, EY wrote, what are the paths to break into venture capital? Yeah. So what I would say is please don't ever go into venture capital if you have not started companies. And the reason I say that is because if you work really, really hard and you network a lot and you get a job at a venture capital firm, you won't be able to progress to partner, right? You might be associate, whatever. It's hard to become partner or general partner unless you've started companies. And the reason is because you get put on boards of companies when you work in VC if you've started companies before, so you can give the management team advice based on your experiences. Yeah. So I would make sure you've started a bunch of companies first, or at least one company. Even if it's not successful, it doesn't matter. You can still give advice. Yeah. And there's this misconception that venture capitalists make a lot of money. Only venture capitalists from the top 10 or 20 firms do, right? And if you work at a venture capital firm, and I have friends at all the firms, right? You get a base salary, which is okay, not a massive amount. In the Bay Area, it's expensive to live here. And every 10 years, you get paid out a big paycheck, if at all, right? These cycles are brutally long, yeah. Okay, next up, Anurag wrote here, and it just skipped on. This happens to me sometimes, all right, let me do a search here on Anurag. When I get a lot of questions, this happens sometimes. Okay, here we go. All right, Alexa, stop. Okay. Next up, Anurag wrote, "Dear Chris, please visit India once the world normalizes. I'd love to." And I've been there before. I actually taught this school I used to teach at during the evenings called the Halt International School of Business. They sent me to Mumbai and to Delhi as well to give guest lectures. And the best damn food I've ever eaten in my life is the dosa, and you're going to laugh at this, at Punjabi Grill in the airports in those two aforementioned cities. And for anybody out there that goes to Indian restaurants, we're all familiar with the amazing tandoori chicken and all that great stuff. But dosa is not really an item on many menus. Ask them to make dosa for you. I promise you, it's the best food you'll ever eat. Ever. I promise you. Way better than a fresh Krispy Kreme donut out of the oven. And so Anurag wrote, we both shall if you visit India, we both shall have our favorite food, masala dosa, together, masala dosa, with a cup of Indian energy drink, tea, and I want a lassi as well. Yeah, it's good protein. And you wrote, it's much better than Coca-Cola. Yeah, I love it. Yeah, thank you. I'd love to. I can't wait to travel again. And what I will be doing eventually is I'll be doing these calls weekly from different countries. At some point, yeah. So I'm doing Rwanda in a couple of weeks at one of the schools that Vital, one of my MBA graduates, and I are making, yeah. All right. Next question is from Anurag, who said, our demographic is one of the youngest in the world. We need mentoring from great teacher like you. Thank you. I appreciate that. Thank you. When one teaches, two learn. Yeah. All right. And next up, Arnava wrote, what are the ways we can enter into investment banking? Yeah. So first of all, before we go there, I want you to ask yourself, before you think about how do I get a new job or new career, I want you to think about why. Why do I want that career? Because all finance students want to be investment bankers. They don't know why. Maybe it's because they think they make a lot of money. But the issue is, if you have buddies that work in investment banking, they make the same amount that you do, and we all do, per hour. They just work 100 hours per week, and they sacrifice their health for a little bit more wealth, which is never worth it. Yeah. It's a tough gig, dude. It's a really, really tough gig. Yeah. But if you want to figure out how to do it, what you can do is network a lot. And I know I talk a lot about this, but I really, really do believe that relationships are more important than product knowledge, and that your network is your net worth. And so I have a free book for you. Whoops, Netflix. I have a free book on how to network for you. You can go to my website and then just scroll down to right here. Yeah. And you can get my networking book for free right here. I promise you it helps. It helps a lot, because a lot of people, and it's a couple hundred pages and a couple hours of YouTube videos, you can click through it as well. A lot of people work really, really hard in companies, and they keep their head down, and they never get promoted or a raise, and they're stuck in neutral, and a lot of people get depressed. A lot of younger people that, they get good grades in school, they keep their head down, and they join a company, and they keep their head down, they work hard, and they look around and they realize other people are getting promoted and raises faster than they are. And it's not because those other people are doing a better job at all. Au contraire. It's because they asked. And so I want you to network a lot and find mentors or Yodas in your company or in different industries that can help a lot. And I explain how in that book I just mentioned. Or you can take my complete job course. Just go to my website, access my courses, and take it and get your money back. Take it within a month if you want. Yeah. I'm the worst businessman ever. Yeah. Your network is your net worth. Next question is from Bruno. Bruno wrote, hey, Chris, a question about inflation. Sure. Do you think the inflation that we are seeing is transitory? I think it's a disaster. But whatever government officials speak about inflation or anything really, you always have to put yourself in their mind. They want to assuage investor concerns and make sure there's, as we call it in Canada, POG, peace, order, and good government, right? And by putting on a brave face and saying inflation is not an issue, is it insincere? Yes. Is it the right thing to do? Well, they don't want to cause panic. I think inflation's a massive deal. I mean, look around. The price of lumber until recently was at an all-time high. The price of used cars month over month increased 10%, which is the biggest sequential increase in history. There's a shortage of microchips. These new lights behind me here, which I hope they're working well. Yeah. I couldn't buy them new. I had to wait 2 months to buy a refurbished one. You can't get new products. And by the way, for those of you that want a side hustle, start selling used products on eBay. Do a search on my blog for how. My son Dylan is actually doing that now as his side hustle. I give him 20% of everything he sells, but he has to do all the work. I can't. Yeah. And Andrew, my oldest son, he's 17 now, will drive him to UPS. And UPS came to our house a couple of years ago, and Dylan, my youngest one, he looked in the front door and he came up to me and he goes, Dada, UPS is here. Yeah. Okay. UPS, United Postal Service, I think, yeah. All right. Oh, Mark, how are you? Mark, who goes by Satones. Mark wrote, hello, brother. Mark's one of my MBA degree students. He's based in Detroit. He's awesome. And he's starting a company, a mining company. Get this. This is dope. He's starting a mining company that's looking into mining rare minerals on asteroids. I know. He's like Elon Musk. Elon Musk is so long-term focused, he's thinking of colonizing Mars. Yeah. And you remind me of that book Dune. There's a movie. They're making a second version of the movie out soon, I think. Yeah. So Mark wrote here, hello, brother. Do you know if you can invest in stocks from your 401k or IRA without getting taxed? Thank you so much, you rock. Yeah, absolutely. So let me explain how this works in a more general sense, so it's generic and applies to everybody globally. So what governments do in every country is they encourage you to save for your retirement. And it's called different things in different countries. In America, it's called a 401k. In Canada, it's called RRSP. In Australia, it's called Super. But what basically happens is the government in your country, there's a certain dollar amount every year you can invest tax-free. Okay, and you have to max it out if you can. And if you're not sure what it's called in your country, do a search on Google for this. 401k equivalent in X. And X is your country name. And so what happens is you can invest a certain amount of money every single year into your retirement account, the 401k, for example, tax-free. You don't pay taxes. And what happens is you never pay taxes until you take the money out. And so that amount you put in every year grows tax-free, right? A massive amount. Then you take it out years from now when you retire, whatever, when you need it. Then you pay taxes. But by then it's already a massive amount. If it was taxed every year, it wouldn't grow as quickly. That's what a 401k is. Now there's something called a Roth IRA, which basically means it's the inverse. You pay taxes first, and this is just in America. You pay taxes first, then you put it into your Roth IRA, and then it grows a lot, and when you take it out, you don't pay taxes. Why would you do that? Well, you do it if you think two things. Number one, if you think taxes are going to be way higher in the future, or number two, sorry, England. Number two, you do that if you think that you're going to be in a very, very high tax bracket one day. Yeah. Which doesn't occur because wealthy people in this country, which is unfair and moronic, they pay less in taxes percent-wise than people that have nothing. And Warren Buffett has publicly disclosed, he said, it's ridiculous. You know, he pays less in taxes percent-wise than his assistant does. Yeah. Okay. And then you wrote, thank you so much. You rock. Thanks, buddy. I love all your icons as well. High five to you. Okay. Michael said, is this recorded because I missed my question? Yeah. So if you step away from it and I answer your question, you can always get access to it. I'll show you how. So all you do is you go to my website, and then you go to About Chris here, and then you scroll down. I don't know if my face is covering it, but at the bottom here, you'll see weekly webcasts. Okay, and you can get every webcast that I've ever made here. Yeah, all this stuff over the years. Yeah, it's been fun, and I'll do this every week till the day I die in 8 million years. All right. Okay, Victor wrote here, what's your favorite activity in Grand Theft Auto? Yeah. I like the missions, and I like doing the missions as Franklin and Michael. Okay, not Trevor. Trevor and he's Canadian in the game, right? And he's the rudest dude ever. Dude, Canadians are not like Trevor. I promise you. Yeah. Although Trevor cracks me up, especially that one when he took on the U.S. Army. I shouldn't say that. Yeah, it's funny. Okay. And Michael, the Aquahood, wrote, my cat is called Ruby too. Very cool. I love my cat, man. I love cats. Yeah. Love it. Yeah. We got our cat from the cat shelter here it was last October or something. Yeah. And it's crazy because my wife and my kids, you know, if they're out of the house for a night or two on some events, they'll come home and they'll walk by me. They won't say anything. They'll say, where's Ruby? Yeah. The cat runs the house. They're amazing animals too. Incredible. Yeah. All right. Okay. And Rinsler said, which ETF is best in India? I actually don't know. Sorry. Yeah. But if you want, you can just do a general search for Indian ETFs. Make sure it's being sold by a reputable company. Look at the fees as well. And make sure it's liquid as well. It trades enough. So you can get in and out if need be. Yeah. And India is one of my favorite countries to invest in the long run. It's the world's largest democracy. There's a lot of great investment opportunities there. I've done a ton of work investing there, not just in tech stocks like Satyam Infosys, Wipro, but also in Mahindra, Crompton and Greaves, Tata, etc. Yeah. I know the economy very well. I love it. Yeah. Okay. All right, next up, Arjun wrote, thanks, Chris. You always say about the Goldman guy when I ask questions. Oh, thanks. Yeah, sorry. That's what happens, dude. You get older, you repeat things. Yeah. The older I get, the better I was. Yeah. So be careful if you're considering buying my courses. I don't know. I'm senile now. Yeah. I'm not. Don't worry. Yeah. I'm not senile. Next question's from Arjun, who said, thanks, Chris. You always say about the Goldman guy. No, I'm just kidding. I did that on purpose. Sorry. Okay. All right. Okay, next up I've got here Raj. Hey, Raj wrote, hi, Chris. What would be the time duration of the next week's Wednesday's webcast? Yeah, it's going to be probably about 2 hours or so. Yeah. And it's not, I don't think there's going to be a replay, but you can check it out live. Go to harounventures.com/ all lowercase web class, all one word, web class. Yeah, it'll be fun. It'll be worthwhile too. You'll get a free course I never give away. It's one of my very long ones, not the crypto course. You'll see, and you'll get a taste for what the MBA program's all about as well. Yeah. And Americans, it's not about, it's about. That's how Canadians say it. That's the right way to say it. Okay. All right. Okay, let me see here. Next up, I've got Vishnu, who wrote, that's my favorite too, the Interstellar theme song. It's great, hey? The gorgeous sonic architecture that Hans Zimmer creates. I don't know how he does it. He's amazing, dude. He's incredible. Yeah. Just listen to soundtracks if you're ever in a crap mood. Oh my God. RVC, it has been ages. RVC, it's been at least 2 years. So RVC is one of my amazing students from British Columbia, right? From Vancouver. Yeah. And I remember talking to you once about, it was frustration you had at a conference and at the hotel. I remember that too. Yeah. Excellent. Wow. Great to hear from you, man. It's been ages. I hope you're doing well. Great to hear from you. So RVC wrote, hi, Chris, so glad you're still doing these. Number one, do you have any strategies to deal with micromanaging superiors in a company? I feel like it's soul sucking and chipping away at my confidence. Yeah. And the way you ask this question is exactly the way you're feeling now, based on that message you sent to me that one day about the hotel thing, the hotel conference. Yeah. And I think what's happening is subconsciously you're telling yourself that you weren't made to work for somebody else. Okay. And earmuffs time, guys. There's nothing worse than spending the rest of your life being someone else's bitch. And if you feel frustrated working for a schmuck, couple things. Number one, you're getting an education in how not to manage people. And number two, most importantly, is being frustrated working for somebody else kind of forces you to get outside your comfort zone and either get a better job or change careers to make more, or more importantly, start your own business. And if I can humbly help you start your own business, then I've done my job. And RVC, I'm going to take a very short break. Let me show you a video that's going to inspire you right now. Okay, this is my 1000th vlog. It's a minute. I'll be right back. Stay here. Don't go anywhere. If you bully people at work, meaning if you're a corporate bully, then I want you to keep watching this. Otherwise, don't watch the rest of this vlog. It's going to be out there today. But for you, the corporate bully, I want to thank you. I want to thank you for being such a jerk. And by the way, you peaked in high school and you're so insecure that you treat people poorly. I get it. You're really insecure. I understand. But you know what? In a bizarre way, and I think what you've done at work, treating people poorly, is disgusting. But I think in a bizarre way, I want to thank you. Because you've motivated the people that you've treated poorly to quit and to join another company, or you've motivated them to start their own companies. You see, frustration in business can be a beautiful thing. And I say it with love in my heart, because if you're frustrated at work because you're being treated poorly, and I've been treated poorly many times before, then that forces you to get outside your comfort zone and get a better job, or better yet, start your own company. If I can be resourceful in any way, helping you start your own company, please let me know. Thank you. Not the bullies, just the people who are being bullied, like I was. Thank you. All right, thank you for your patience, everybody. I'm back, for better or for worse. Okay, in RVC, in terms of micromanaging superiors, you can't micromanage them. You can kind of macromanage them. If you try to manage them too much, they might kind of push back and you'll get Heisman'd. What I recommend doing is always ask for feedback. Like you won't get fired in general if you ask for feedback a lot. And so after you do something good and your manager, compliments you, then sit down with her or him and ask them, I really enjoy being part of this team, if it's true. And I'd love to humbly ask you, because it's expensive to raise a family in this area in Vancouver where you're from, fourth most expensive city in the world. It's expensive to raise a family here. And I'd love to ask, please, humbly, what I need to do in order to add more value to the team and get promoted or a raise. And what they'll do is they'll give you feedback. You got to strike when the iron's hot, though. Only ask when they're in a good mood. It's like you only ask mom and dad for stuff when they're happy. And then they'll tell you. And then once you accomplish that criteria, then what you can do is set up another meeting with them after they compliment you again in 3 or 6 months, whatever. And, start by bonding with them a bit. And then say, last time we talked, you talked about what I need to accomplish in order to get promoted. I love being part of this team. Fuck you. I love being part of this team. That's to the manager, sorry. Only because I know you're having issues with, you mentioned before. I love being a part of this team, and I'd love to please ask for a promotion. You have to ask. And nobody is made to the top in any company or become a department head or a boss, whatever, without asking to get promoted many, many times. You have to do that. And by asking for feedback, when there's a round of cuts in the future, you're less likely to be let go. And if you work in a big company and you don't want to ask your boss about the criteria for getting a raise or a promotion, then go online to the HR portion of your intranet or website, whatever, for your company, and get the criteria or review form for people at the next level above you. Yeah. Okay. All right. Okay, give me 1 second. Yeah. Patrick Wisdom, I love your last name. So Patrick wrote, I'm applying to Goldman Sachs Investment Banking Division. Any advice for me? Thank you. I'm enjoying the investment banking course. Thanks. Yeah. So a couple things. Number one, and I'll answer this generically speaking to apply to everybody applying to any company. What you want to do, and I'll talk about my mistakes when I interviewed at Goldman. So Goldman, they don't hire the smartest people, which is why I got a job there. I worked there for 5 years. They hire people that kind of get along with each other. And that's a good thing because the jerk factor is quite low, because one bad apple can destroy the whole damn bunch. One jerk on a team destroys the culture of a team, as you all know. So what do I do, Chris? So what? Well, whenever you apply and work at a company, I want you to study their corporate mission statement or vision statement or corporate culture, which is listed on their website. And when you answer questions, what I want you to do is I want you to answer questions by incorporating elements from a qualitative perspective of their corporate culture. Let me show you how. So what you do is, let me see, for Goldman Sachs, their culture, they have 14 principles. Here it is right here on their website, our principles. And so at the top here, these 14 principles, I will not go through all these, I promise you. It says our client's interests come first, right? So talk about putting the customer first, because a company is only as good as its customer service. Also, we stress teamwork in everything we do. So that's a strength word I want you to use, which I teach in my MBA degree program and my complete job course, how to interview. You have to use strength words like the word teamwork, etc. And so what I want you to do is I want you to go through your resume, every line of your resume, and I want you to think how each of these 14 principles applies to each line item on your resume, so that when you when you answer questions, you incorporate your experience and one of the 14 principles as well. That's what I would say. Another thing to do, which is what I didn't do, which almost didn't get me hired, was I didn't remember the name of the CFO. I know it's ridiculous. At the time, the CEO was John Thornton, but you got to know the names of the high-level executives, whatever. And most importantly, okay, set up a Google alert so that you're automatically told about anything that occurs with keywords Goldman Sachs every day through email the second it happens. So make sure that you do a search on the company name the morning of the interview, and I want you to read the Wall Street Journal and the Financial Times the morning of the interview as well, so that you know about relevant stuff they might ask you about. And I will show you how to get the Financial Times for free. Okay. If you go to ft.com, and FT, Financial Times, is like the Wall Street Journal, but global. And if you want to read an article here, right, let's see here. Say I want to read this article here, okay? It's going to say, whoa, you got to pay first, right? And I'm like, screw that. And I'm never taking sponsorships, and now you know why, because I fight for my students first, not advertisers. So here's what you do. You copy the name, okay? Let me try to do here. Hold on. You copy the name here. This you copy, okay? I'll figure it out here. And you paste it up here, okay? Okay. And then just the title, okay? You search, then you click here on the link, and screw you pop up. You can read it all for free. Why does this work? It doesn't work with all newspapers. It works because if the FT didn't allow this to occur, then from a search engine optimization perspective, no searches would come up in Google. So anyway, make sure you read the biggest news releases of the day. Coincidentally, Goldman Sachs right here is written. Okay. Another thing to do is, let's see. The morning of, you want to, read up on everything. And I teach this in my complete job course and in my MBA degree program in much more detail, okay? Another thing you can do is when they ask you questions, if they're a jerk, don't worry, they're acting in most cases, unless it's RVC's boss, right, RVC. But if they're a jerk and they're pressuring you, don't worry, it's an act. You're an actor too, just have fun with it. But what they do also is they ask you questions and they want to see if you're going to BS. And here's how they do it, and here's how they did it with me. They said to me, what markets do you follow overseas? And in the interview, it was with Aaron Lieberman, I remember, who's a managing director there. Nice guy. What markets do you follow overseas? And I said, well, I look at a lot of European markets. And they said, okay, well, what's the market called in Germany? And I said, the DAX. And then he said, well, what company do you follow on the DAX? And I said, Daimler Chrysler at the time. And he said, well, who's the CEO of Daimler Chrysler? And I said, oh, it's Jürgen Schremp. And then he said, well, who's the CFO or he asked some other question I didn't know the answer to. Right? He's going top level drilling down. And I didn't know the answer. And I said, I don't know, but I'll find out. And I wrote it down. And then what you do is quickly after your meeting, you send a thank you email before they submit their form on you if they want to hire you or not or whatever. You quickly send them an email. Subject line is thank you. The contents of the message is as follows. Joanne, thank you very much for your time today, semicolon. I enjoyed our conversation. In terms of your question you had on Daimler Chrysler's whatever, I did some research and here are my humble thoughts. And then at the bottom you wrote thanks again, comma, your future boss. Chris, not your future boss, sorry. Okay. All right. And when you practice your answers as well, what I want you to do is I want you to record yourself. Okay. And when you answer questions, I want to make sure you don't sound too monotone and make sure you don't sound too arrogant in the inflection of your voice. Because your delivery is crucial. And as Maya Angelou once said, people might not remember what you said, but they'll never forget the way you made them feel. And I teach how to answer questions the right way in my complete job course and in my MBA degree program in a lot more detail. In fact, in my MBA degree program, I've made 11 brand new templates to bring that you can fill out to your interviews to ensure that you're adding value and get the job. And you got to put yourself in the mind of the other person, always in business. And so understand that people are motivated by three things in business. Number one, they want to make more money. Number two, they want to get promoted faster. And number three, they want to enjoy their job. Okay. So what can you do with this investment banking person? Well, it depends what level they are at. If they're and basically the way investment banking works is you progress through the firm and you become a partner. And a partner basically means a salesperson, right? A partner in a law firm, same thing, a salesperson, bring in new business. So you might want to think about how you can introduce or come up with new investment banking ideas, depending on the department you're interviewing with. If it's George Lee, great guy, who's a head of tech banking, you want to talk about potential tech deals and think of introducing him to certain people as well. Yeah, George is a great guy, George Lee. And I introduced Mohammed, one of my students from San Francisco State, to him as well. He had a great informational meeting with him as well. Yeah. Okay. All right. Let's see here. Next up, RBC is saying senior management sets the hiring tone in a company. I think people hire people like themselves. It's true. And especially people who look like them. How does this impact equity and diversity in your opinion? Yeah. So you hit upon an important thing, which is people that are similar. And when you're networking, I'm going to answer this carefully in the right way. When you're networking, I always want you to find people that have something in common with you. Maybe they went to the same school as you, the same high school. Maybe they're also from Victoria, or they're from wherever somebody is from years ago. And so when you reach out to people for a networking meeting, you keep it generic over LinkedIn, okay? You find somebody that's usually older than you, that's more successful because they're older. And you keep it generic and simplistic. You send an in-mail. This works, I promise you. In the in-mail, the subject line is 2 letters, hi, H-I. The contents of the message are as follows in LinkedIn. And by the way, every in-mail you've ever received, this goes for everybody in this call, you've opened. But I can't say the same thing for emails because most of them people don't open. And so in the LinkedIn email, you write, Joanne, for example. Hope all is well. I also went to the Toronto French School, and I'm also from Mississauga, and I live here in the Bay Area. All true. Please let me know if you have time for a quick Zoom call or coffee when times get back to normal. Thanks, Chris. You never say why you want to meet. And when you meet, and they're going to take the meeting. If you say why you want to meet, like you're selling something or you want a job, they're not going to answer because they feel bad they can't help you. But if you just keep it short, like I mentioned, less is more, I promise you it works. And more often than not, they say yes. Why do they say yes? Well, here's why. Close your eyes. Think about 20 years in the future. You're 20 years older and more successful than you are today. And a 20-year younger version of you reaches out to you and says, can we meet? Are you going to say no? You're going to say yes. You're going to say yes. It works, I promise you. You just have to try to do that if you can't. When it comes to diversity, I don't know if I can answer that question properly. But you certainly don't want to work at a company that doesn't have diversity as part of their corporate culture. Yeah. Aside from that, I don't know how to answer that question. Maybe you bond more so with people that are from similar backgrounds. Like maybe they're from the same hometown, Mississauga, or went to the Toronto French School, or whatever it is. When you search and seek and find mentors in your company. Yeah. And if you interview with a company that doesn't have a breadth and depth of beautiful diversity, then you shouldn't want to work there anyway. Yeah. All right. And it breaks my heart, RBC, to see what happened in London, Ontario recently with Islamophobia. It breaks my fucking heart because, I'm sorry for swearing, but I'm mad. I'm from London, Ontario. I was born there. And what happened breaks my heart. And Justin Trudeau, God bless him, he did the right thing this time by condemning it. But as progressive as I think Canada is, and as proud as I am, damn proud to be Canadian, we still have a lot of work to do when it comes to diversity and inclusion. Yeah. Okay, next question is from RVC. And it makes me so mad. Like I want to scream into my pillow when I think about what happened in London, Ontario. All right, last question, number 3. How can one deal with jealous coworkers after a promotion? Yeah, it's going to happen. And if you don't have people criticizing you or jealous of you, then you're not successful enough. It's going to happen. And here's what I want you to do. Whenever somebody criticizes you, I want you to think to yourself this. Don't say it, but think. Thank you so much. Thank you. You're so insecure that you complimented me, because unjustified criticism is nothing more than a disguised compliment. And you will get criticized more, so I promise you. You should see the brutal comments people say about me. Not that I'm successful or anything, au contraire. But, at first it used to bug me, and now it's just kind of like Teflon. Thank you for the compliment, that sort of thing. And people will criticize you in different ways using body language, right? So, and you'll find out who your real friends are, when something great happens to your career. And they say something like this, yeah, congratulations. Like, you can tell the way they say it. Yeah. So, and if you become more successful and your friends are jealous of you and whatnot, it's a disgusting trait, jealousy. And you can't learn how not to be jealous. It's just the way they are, and you cut them off. If anybody brings you down, you cut them off. Get them out of your life, if you can. Okay. But it's great to see you, RVC. I'm glad to see you. It's been a couple of years, and I hope you join us again. Yeah. All right. Next question is from Ian Y. I'm a data analyst, and I've been thinking of... hold on one second. Yeah, I'm a data analyst, and I've been thinking of pivoting to be a product manager, to be a venture capitalist. Thank you, Chris, for making me focus on what's really important. Build first. Yes, yes, yes. Never go into venture capital unless you started a company first. Yeah, and you don't have to have had a successful exit. Yeah. All right. And then Mark wrote, the spice. Yes. When you say the spice, you mean I look like Sporty Spice? Because I'm sporty today? A little bit? No? Okay. Okay. All right. Next up, Ian Y. wrote, by the way, I love the new visual background and presence. Thank you. Appreciate it. Yeah. So it's getting better. It's getting better. And again, I won't be happy until it looks like CNBC quality by the end of this summer. Every week, we're going to strive to get a little bit better. Yeah. Okay. All right. Next up, Victor. Victor wrote, Chris, tell me about, and you spelled about correct. Thank you. Tell me about what you have under your desk for jogging. Yeah. So I've got this. It's the cheapest treadmill you can buy, and I get 20,000 steps in per day. And on this thing, I've walked almost 15 million steps over the past couple of years. Why? I'll show you. Alexa, what's 20,000 times 365 times 2?
20,000 times 365 times 2 is 14.6 million.
Yeah, a lot of steps. And you don't even realize it, right? So let me start here. And when I do my one-on-one meetings, what I do is I'm always walking on this thing. It's a little bit squeaky now. I got some WD-40 for it, but I get all my steps this way, right? And I put it on maximum speed always, which is 3.7 miles per hour. This is me getting my groove on, getting my exercise, yeah. And I'll show you where I get this from, okay? So what I do, I'm standing on the sides of it now. It's the cheapest treadmill you can buy because there are no bars around it. And I have another one upstairs I just throw under the couch. There's a couch as well. Sofa. But let me show you. Okay. So I'll take you to Amazon, and I'll show you the name here. Amazon. And I will search my orders, and I will search here for treadmill. Here it is. All right. So here it is here. So it's called Rhythm Fun Treadmill. It is expensive, but what you do is you put it underneath. I'm sorry, my face is covering that up. Here we go. You put it underneath your couch or your desk, whatever. And I have a stand-up desk here as well, right? And so you can slide it under the couch as well. Don't pick it up like that; it's too heavy. You can put it under a desk. This is what I do. I have one of those desks that goes up and down. Yeah. So this is it here. Yeah, it's great. And then this product here, actually, if you don't want to buy one of these things, but you go to the gym, you can buy this. It's like $39 or something. And you can hook this up to any treadmill or walker or whatever, put a tablet, a PC on it, whatever. And then in the gym, you can actually get work done. And this is how I try to be humbly productive as well, is by whistling while I work, so to speak. I exercise while I work, because what happens is this. When you first wake up in the morning, the first hour of work or studying you do is the most productive. And then at night, when you try to work, you're brain dead. And 8 hours of work or studying at night is equivalent to 1 hour in the morning. However, if you walk while you work as well, or have one of those little bike things on your desk, what happens is, this is the best biohack ever. It basically releases more oxygen you're taking in. And if you treat this well, this works much gooder. It works. I promise you, try it. The best investment you'll make is this thing. Don't buy stocks. Buy this first. Because an investment in your health is more important than anything else. It pays massive dividends. Yeah. Okay. All right, next up, we got just a couple of minutes left here. Next up, we've got Anurag, who wrote, Dear Chris, if you're interested in investing in the Indian markets, you might want to check out Saurabh Mukherjee and his books. He's just brilliant. I've got great investment ideas following him. No, thank you for that. I appreciate that. Yeah, thank you. Yeah, I love the Indian economy, and it's probably the best place to invest. Actually, the second best country to invest for the next 20 years. The best country to invest in, let me build up to this. So how do you profit off of China becoming more communist? It breaks my heart, but they're moving more left-wing. Disgusting. Well, if you think about it, a lot of companies love to be based and do business in Hong Kong. And damn you, Chinese government, for shutting down the Apple Daily website. It was a news service which reported the real news. It was up for 26 years, and Beijing shut it down a couple days ago. Yeah. So how do you make money investing in Chinese because of China becoming more communist? Well, if you're a big company and you want to have a presence in Asia, you're not going to open an office in Hong Kong anymore. You're going to open an office in Singapore. So look at Singapore. Maybe look at Singapore-based ETFs and buy and hold them forever. Yeah. Okay. And Michael, who goes by the Aquahood, Michael, said, same in my house. My cat is greeted first. Everybody else is second. Ruby runs the house. Amazing creatures. I love it. Yeah, cats are amazing, man. And 95% of their DNA is tiger. It's incredible. Even from when they're babies, they're so cute, man. Like they try to hunt. You know, they get in this mode here. Adorable. I love cats. Yeah. And they mature fast. They get pregnant when they're 4 months old. It's crazy, man. Yeah. But I love kittens. And my son Dylan and I, every night I say prayers with him. And then on my iPad, we do is we actually go to TikTok and we watch tons of cat videos. Yeah. And I wish TikTok had a ratings button as well, because some of the stuff, you know what I'm talking about. Yeah. And RVC wrote, thank you, Chris. You're the best. My pleasure. And it is so awesome to see you again after 2 weeks. I hope you join us again. I miss you. Okay. And Ajay wrote, I'm a developer. I invest 60% of my actual income in 8 different industries and 100% of my passive income in debt funds. Oh, interesting. I also have 6 months of emergency funds. Do I need to change anything? Yeah. I would say that if you're investing in debt funds, I'd be careful. It's better off to buy funds instead of individual debt products. Because a lot of people think if you buy bonds in municipal areas, for example, that you can't lose your money. You can. You know, municipal bonds can go to zero. like what happened with Orange County a decade or so ago. Yeah. I would make sure you have a different mix shift, I should say, of not just debt instruments, but diversify into stocks, commodities, and real estate. And if you don't want to buy real estate, or you're at a point you can't or yet, then what I recommend doing is maybe looking at REITs, real estate investment trusts. And you can type up tickers for REITs. They look like stocks. They are kind of like stocks. And the law is that if you set up as a real estate investment trust, meaning a ticker, a company that owns a lot of real estate stuff, then you have to pay out 90% of your operating income in the form of dividends. So I would look at diversification that way. Yeah. Am I buying stocks right now? I'm waiting for people to freak out. Kind of like cryptos. People are freaking out now, which I like. Yeah. And you can go to my website, harounventures.com. And at the very top, do a search for VIX, V-I-X, because that's the best telltale and signal ever to buy stocks. It never fails. Yeah. Okay, next up, Patrick Wisdom wrote, "Wow, this is awesome, sir." Chris, please. Thanks so much for the explanation. My pleasure. And thank you for being here. Thank you. And next up, we got Mina, who wrote, "Actually, I think people can learn not to be jealous when they realize everyone's path is different." We went through that with my best friends. Yeah. And Mina, you better be careful, because your video game startup is going to be so incredibly successful that you're going to find out who your real friends are. That's a compliment. Yeah. All right. And Mark wrote, "Frank Herbert's Dune the Spice, but you're dressed to kill." Thank you. That's right. The Spice Wars. I remember Sting, musician Sting. He was in the Dune movie back in 1984. And he was great. Yeah, I think he had green contacts on or something. I'm a big fan of Sting. He's a great guy. Oh my gosh, Himanshu, it's been a long time. I hope you're doing well. There's a guy that I mentored when I worked at Accenture years ago, named Himanshu. He grew up in Russia. He's from India originally. He grew up in Russia, and then he worked with me in North Carolina. Great guy. I miss him. Yeah. Okay. Next up, Michael wrote, "I didn't know that about 95% tiger for cats." Yeah. When you watch TikTok and you do a search for cats, you get these really cool videos where they tell you amazing facts about cats. Yeah. Like my cat loves me only when I'm about to feed him. Yeah. Or her. It's Ruby. Yeah. And apparently, I've never done this with my cat, but if you take a cat upside down and you drop them, like they always land on their feet. Don't do that to a cat, though. And then you said, "I'm going to be telling everyone that now." Yeah, for sure, man. Yeah, Ruby's got the eye of a tiger. It's great. And then Steve is Magic is saying, "Can you tell us more about the VIX?" Absolutely. Yeah. So let me try and do this in a different way to try and challenge myself. So what I'm going to do is I'm going to use my top monitor here. And I'm going to draw on my screen because it's fun. All right, so let me go here. Teaching is fun. Let me go over here, and let's go to finance.yahoo.com. Okay, and then what I'll do is I'll type here the VIX. Okay, whoops, that's the wrong one. That's the inverse of the VIX. VIX is the ticker, okay, right here. And this is from the Chicago Board of Exchange. It's a volatility index. All it does is it measures volatility, meaning how much stocks go up and down for the S&P 500. And so when there's high volatility, it means there's maximum fear in the market. And that's when you buy, when there's maximum fear. Because as Warren Buffett said, you want to be greedy when others are fearful and fearful when others are greedy. So let's look at the chart of the VIX. And every chart tells a story, and this is fun. Okay, so the VIX was started around 1990, okay? And let's go back and let me tell you a story about the VIX. All right, let me see if I can turn on. Here we go, good, okay, great. All right, so the VIX was founded around 1990 or so here. And when the VIX spikes, it means there's a lot of fear in the market. And when the VIX spikes, the market usually goes down a lot because everybody sells stuff when they're scared. So right here, the VIX spiked December of 1990, which was Gulf War I. There's fear, of course, in the market. You saw a mini spike here with the Latin American debt crisis when Argentina went belly up and the bond market got destroyed. You saw another spike right here in the VIX when you had the Asian financial crisis. They call it the Asian flu, which has nothing to do with COVID. But a lot of Southeast Asian tiger, they call them the tigers, had economic problems. And right here, I remember I worked at Goldman, and Alan Greenspan, the Federal Reserve chairperson, I was on the trading floor that day. He announced on CNBC or C-SPAN, which you watch if you want to fall asleep, he announced an emergency rate cut, and the market spiked. I remember that well. Then here you had another spike. It's tough to see here. Eventually, when the dot-com bubble burst, which I think was March of 2000. You saw another little spike here around 9/11. And then you had another massive spike. And let me see if I can do this justice and show this to you. All right, let me go here. Whoops. Let me turn off my writing. Drag here. Oh, yeah, here we go. Good. This is what I want to show you. All right. So then you saw, and let me delete all that crap. Then you saw another massive spike here in 2008. Okay. And this one's important to talk about. We were within 24 hours of bank machines not working. Okay. And the VIX right here got to around 80. Okay. It was absolutely terrifying. And that's your telltale signal to buy. Back up the truck and buy stocks. And when it happens, when the VIX spikes to an all-time high or close to it, it's going to feel uncomfortable. And you're going to say to yourself, oh my God, I'm crazy if I buy stocks. That's when you buy, because everyone else is scared. As Warren Buffett said, you want to be greedy when others are fearful, and fearful when others are greedy. Now, let me show you what happened last year in March, in 2020. It shows here a reading of, it looks like it's 65 or so in the VIX. It actually got higher than this amount here. Let me see if I can figure this out here. Okay. But in order to see that, you have to actually look at a shorter term chart here. So let's look at 1 year. And let me go back here. Okay, hold on a second. Aha, there we go, good. The VIX at this point went to an all-time high right here, about 83. And that is when you back up the truck and buy stocks, because there's a lot of volatility and fear in the market. Again, the VIX is on the CBOE, an options exchange, which I'll be teaching about in my options course coming up soon. And it measures the amount of volatility, meaning fear, because people buy and sell stuff a lot when they're scared. Mainly sell. It tells you the volatility of the S&P 500. And so that's the telltale that I would use. Now, I've got to wrap up this call because we're coming up on 11 a.m. And so I see there's a lot more questions and comments. I want to thank you all for joining me for our 142nd, I think, weekly webcast. I'll see you next Thursday and every Thursday at 8 a.m. My time, San Francisco time. Please like, subscribe, and comment if this was helpful. It helps me. I usually don't ask for that, but I am now for some reason. My marketing team wants me to. And then, most importantly, though, I want to mention before you go. So I'd love to see you all join my event next Wednesday. Okay, my event next Wednesday. The way you can get access to it is you go to harounventures.com/webclass. Okay, all lowercase. Web class. Here we go. Great. Well, that's my alarm. That's my alarm to tell me I got to wrap it up. What movie is that from? You all know. Okay. All right. So if you go to harounventures.com/webclass, webclass lowercase, you'll be able to sign up here for this event. Okay. And when you sign up and when you join, what happens is I'm going to be giving away a course that day to everybody on the call live only. And it's a course I hardly ever give away. It's a very long one. It's not my crypto course. It's another one. It's my absolute best course, I humbly believe. And during that call, what I'll also do is I'll give away one of my MBA programs for free to somebody on the call. And there will be a lot of prizes. It'll be fun. And you'll get to see what it's like to be in my MBA degree program. And even if you don't sign up, I'm going to teach you 5 amazing concepts that are going to help your business or your career that day. New stuff, okay? And those 5 topics are as follows. And these are the 5 portions of my MBA program. Entrepreneurship, finance and accounting, sales, marketing, and communication, personal growth, and economics management and strategy. I hope to see you there. God bless you all. Have a wonderful weekend. Stay safe, stay healthy. Pray for everybody that's been adversely impacted and quarantined with COVID. And I hope things get better. And I will see you soon. And like I do every single week, I end with a video that I licensed from the Silicon Valley Historical Association from Steve Jobs. This video is life-changing. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.